Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live on this Thursday morning. Joining me in studio is our senior economist, Tracy Shuchart. Good morning, Tracy.
Good morning, everybody.
And joining us on the big screen with his new but older glasses, our senior market strategist, Jimmy Cagnina. Good morning, Jimmy.
Good morning, Deli. Good morning, Shai. It is yet another glorious day on the island.
Yeah, well, unless you're long copper. I mean, and I say that, I feel bad for anyone that is, honestly. And I honestly can say I don't remember seeing a move in commodities like this since crude oil went negative. I don't even know what to say about it. And I know that people are going to say, well, what about breakers and all these other things? There were circuit breakers that were hit, with these commodities. I like actually that the exchanges let them continue to trade because it's a commodity that, look at, if it goes up or down a significant amount and there's liquidity along the way, let them trade. But copper's down nearly 22% this morning. And I don't know what to even say about it, Shai. I'd leave this to you.
All right, so let's talk about what happened with copper yesterday, because right when the rate decision came out, Trump dropped an EO. Now, I don't know why people are reporting on this wrong, so I just want to
because they're the media. They don't know what the hell they're doing.
Set the record straight. All right, so he sent out his EO on copper. Remember, he said it was going to be 50% tariffs. Now, it was 50% tariffs, but it was on semi-finished copper products, such as copper pipes, wires, rods, sheets, tubes, things that you definitely need for grid expansion, homes, building, etc. However, what he did not include was copper or concentrates, mats, cathodes, and anodes. So what that means is, and we have been talking about the problem with copper, with the United States trying to import as much as they can, causing shortages in LME, and then because China was short copper, they had to transfer their copper to LME to cover theirs, and it was causing all sorts of distortions in the market and pushing up prices. Now, what is stored at LME and what is stored at COMEX is copper ore. So they've been rushing to get as much ore to the U.S. as can, thinking that there's going to be a 50% tariff on it. Now, when that didn't happen, the bottom fell out of the market, right, because this is not going to happen. And we also saw a reaction in copper miners who had been benefiting from higher prices and this tariffs thing. So we saw a dump in copper miners. We saw a dump in copper prices. Now, I do think that copper prices will return after kind of all of these dislocations in the market sort themselves out because we still have global grid expansion is fueling a fresh copper surge, rising everywhere faster than anyone anticipated. We already have shortages in the market for copper, just from a supply standpoint. We've had like the major producers in Congo and Chile, they have they've been constrained by lack of investment. And so we're going to have prolonged higher prices. This is going to take a while to sort itself out in the market as far as all these dislocations are concerned. So that is the story on that. Now, we also saw platinum and silver react. Why did we see platinum and silver react? Because platinum is attached to copper mining, not exclusively, but it is a valuable byproduct from large copper and nickel mining operations. And then for silver, approximately 70 to 80% of silver globally is produced as a byproduct of lead, zinc, and copper, and sometimes gold mining. Only about 20 to 30% comes from mines that just only target silver. So we saw a reaction across the metals market because of exactly what happened.
Well, it comes back to these are physically delivered products, right? I mean, that's the bottom line. I mean, this is the same situation with crude oil. If you forget, when crude oil went negative, it's because people didn't want to take delivery. They didn't know where to store it. And so all of a sudden, everyone's like, wow, it's a physically delivered product I need to sell. And you talk about, copper, people getting near expiration, not needing to store as much of it. I mean, it's a whole ripple effect. And this is honestly the biggest difference. And I've talked about this a lot between trading commodities and indexes, because indexes are financially settled and commodities are physically settled. You are going to have these situations, and it could be in any commodity. And that's why I've said before, when we talked about platinum, when we've talked about silver, we talked about gold, I said, you got to work stops in these markets. Not that you don't have to in NASDAQ and these other markets. It's just it's a different situation, but you also have monthly expirations. You have so many different things that come into play when you have a physically delivered product. And these things can go way further than you think. You know, as we were talking about, like platinum is the most recent one, comes to recent memory, where I say, you don't want to sell into this rally, because if all of a sudden there's not the ability to deliver that much platinum, the price could just explode. I mean, platinum could double. I mean, it nearly did anyway, but it could double again, and because there's not enough platinum to be delivered. When you get to copper, this is why commodities have futures markets, everybody. This is the exact reason. This is why the open market decides price. Jimmy, I don't know if you want to touch base and talk about this a little bit.
Yeah, yesterday, you know, we were doing our FOMC thing, and Blake Morrow was like, "Hey guys, hang on a sec. Look at the copper chart." And what comes to mind for me is how smart, and I'm going to use the word smart, the futures markets are in interpreting the information that comes out accurately. I spent a couple hours trying to figure out why it broke so much, and Tracy was just awesome in explaining it to us. But the market knew immediately, and that thing moved. So these markets are very efficient, and they're, you know, when people say, well, it can't go any higher, it can't get any lower, the market is the price. Price is king. And we saw that yesterday in copper. It was just an amazing, amazing move.
Yeah, speaking of price is king, thank you again, Shai, for explaining that. I'm sure we'll touch base on that more throughout the morning, and maybe what that means, implications going forward, but for other markets. Good morning, chat. How is everyone doing today? We got Engineer Bear, Paulie Mycerona, Cos Perone, we've got Cooper, we've got Christel, we've got Infinity Works, we got Ferrieri, we got Zelino. Good morning, everybody. Thank you so much for joining us. Hopefully that helped you guys. It helped me tremendously, because that is not my forte, understanding what happened there with the copper market. Good morning, Ben, as well. Like I said, speaking of price is king, equities, right? Yesterday you had earnings come out. It's actually nice to see earnings take precedent over FOMC on a day where we get all the news the whole day, the whole week leading up to it is, what's the Fed going to do? QRA, all these things. And listen, they're important, and traders need to know and understand some of these things. But it's good to see that earnings come out, and it's really the backbone of what happens in the stock market. You saw stocks react. Here we are this morning. Maybe a quick recap, Shai. What happened with some of these earnings? And maybe also, I know you were there on the Fed yesterday afternoon. Any insight for those that maybe didn't catch post-Fed what's going on there?
The presser. So, I mean, again, the market did not like what Powell was saying. Obviously, you know, he didn't say wait and see, but he was more hawkish than he was in prior meetings, and he is worried about inflation because that's ticking up, but he really focused on the labor market and was really talking about the labor market and how they're closely watching it and how they're, you know, worried about the labor market. That's why they don't want to cut rates right away. And so I think from here on out, now that we know that that is what the Fed is watching, and we've kind of surmised that, you know, we've talked about this before, we've surmised this is what they are probably watching, but he literally said it. So we know that the labor market right now is of the utmost importance to them. So
big day tomorrow morning.
So big day tomorrow morning. And speaking of which, we did have challenger job cuts come out this morning at 7:30, and the year over year rose 139.8%. So challenger job cuts for 2025 so far are just over 108,000.
Got it. Now, earnings beat. It was Microsoft and Meta up significantly. Jimmy, maybe we go back to you. Coming in this morning, looking at the tape, NASDAQ, S&P, both up. NASDAQ's up 1.25%. Russell is actually down 0.5%. Dow was up only 0.25%. So again, big tech leading the rally. Big tech earnings come out. It continues to be the driver of the market going higher. What'd you see overnight in the markets, Jimmy?
Yeah, I mean, first of all, this interrupted Martini o'clock last night. I was looking at the NinjaTrader mobile app and I was like, what? And so I went, I came up to the desktop and started taking a peek. And we had a huge move after hours because of the announcements. And then we continued going on, right? So we continued our move upward overnight. And, the volume is 137,000 so far in the front month of the E-mini S&P at this point. We haven't seen that much volume for the Globex session anyway in a while. So, usually we're tracking a little bit lower than that. And the continuation rally happened, and now things have kind of settled down. We have a really nice kind of point of control, nice volume profile right now. And really everything is tracking that session VWAP right now, that volume weighted average price, getting ready for the open right now. And even the London initial balance was optimistic. We made a high overnight there at listen to this, 64.68 So yeah, this is peppy, man. The earnings saved us. As Tracy told me last night, the earnings saved us from Powell last night.
Continue to say good morning to chat. We've got good morning to Christopher, Carlos, Emilio. How's everyone doing? Again, thank you everyone for joining us. Another kind of going over what happened in markets yesterday. You had natural gas down 1%, continues its recent slide. Heating oil is pretty much flat. Crude oil coming off the 70 price. Anything coming out with crude oil last night?
Trump announced an oil deal with Pakistan, which was very vague. He said, we're going to choose an oil company to do business with Pakistan, which we don't have a national oil company, so you don't just choose an oil company. They have to want to drill there. And there are about 100 million reasons why nobody wants to drill there and has it. And so I don't know if this project is very feasible, but we'll see. That didn't really move the oil markets much, but, that's kind of what's been in the news as of late.
Got it. And gold continues to stabilize, still continues to hold its bid amongst the other metals. Speaking of which, we obviously know copper's down 22%, silver's down 3%, platinum's down 4%. Gold's holding its own.
Well, what's very interesting is we had a contract gap on the roll, and we literally filled the contract gap and then bounced.
Yeah.
So I always
the buyers are there.
I always watch those contract gaps, you guys. Yeah. If just set your charts to what is it? What was it on?
Remember that whole big discussion? Yes. There's like 87 different settings.
So you want it non-back adjusted, so that you can see where those gaps are. But the commodities, where indices don't necessarily go back and correct all of those gaps, you do find in commodities that they will fill those more often than not.
Yeah, as gold is at 33.59 in the front right now, which has now moved to the DEES contract already.
Correct.
Which is crazy. I can't even believe, are we talking about December in July?
I know.
This is nuts. It is the last day of July, too. So end of the month today, everybody. I didn't put that on my morning note, but I will say watch for some fireworks on the close today, especially with indexes near the highs, all-time highs and stuff. It could get really volatile in the last 5 minutes today. Typically does, but even more so when you are at or near a high or a low of a month or a quarter, let alone an all-time high. A lot of volume will come in. Be curious to see what that volume looks like. I probably expect it to be two-sided, but sometimes it could be one-sided as well. Again, we'll watch that last 5 to 10 minutes-ish. It's going to be busy, is what I expect. Also, let's move into the bond market real quick here, because I know we're going to talk about, we're going to have Shai share some data. I just want to give a quick preview of bonds. Bonds up this morning on the front end and the long end of the curve, 10 years at 4.34%. So the bond market, to me, is in a nice sweet spot also to help the rally in equity. So you've got earnings that are beating by a good amount. You've got a dollar rally that has been subsided a little bit, and you've got the bond market looking into the future saying rates are probably lower. None of this reeks sell the rally in S&P. It is what it is. I've been saying before, it's not the easiest tape. If you're trying to sell it, you're probably for intraday traders, you rotate in and out, but the bulls are in control. Data for today, Shai.
So data today at 8:30, we have jobless claims, continuing claims. That's going to be important. We have PCE price index. We have core PCE price index, which is the Fed's preferred metric. So that will be important. Personal income and spending at 9 a.m. Dallas Fed PCE, 9:45 Chicago PMI, 10:30 natural gas storage. So really this morning, 8:30 is what you want to be watching. The rest is not market moving.
Yep. Last thing before we get into the Edge Report, quick preview of our guests following Jimmy's Edge Report.
We have Velina Tchakarova, founder of Face for a Conscious Experience. I've known her for a very long while. She's great. She is a geopolitical analyst. She covers everything. So I'm really excited to talk to her. All the headlines today were about tariffs and trade deals. So I'd like to get into that with her and what that means, and particularly what the 25% tariff that Trump announced yesterday on India means for them.
Yeah, I've been following Velina forever. This will be the first time I get a chance to speak with her. Looking forward to that. All right, it's about that time, everybody. Take it away, Jimmy, for this morning's Edge Report.
All right, let's start with the 30-year bonds right now. I like what I'm seeing right here. This is a daily candle chart. We can see a swing low back on May 25th, and then a swing high back on the beginning of July, and then a higher swing low on the 16th, which has I'm interested in this higher swing low. And we have a nice trend line coming up, kind of a breakout of an ascending triangle if you use your imagination. And the outside fib, well, we're above 38.1% right now. We have equal and opposite candle brewing so far. To kind of equal and opposite would be a green candle about the same size as yesterday's red candle. So there are buyers in this market. This is moving up. We have a new paradigm level now at 114s. We were in 113s for a long period of time here. So we bumped up really nicely here. Cash yields this morning, last time I checked, was down to 4.873%. So there are buyers coming in here right now. This have a little bit of a bullish momentum to it. Intraday, we have some great targets as well. We just hit Jax 2. That's 114 and 16/30 seconds. We have R1 is in a way here at 19, and then that one-day max is at 21. This is that Menthor Q level one-day max. Previous sessions highs, another target on the upside at 25, and then we have that call resistance level at 115 even. If you're bearish in this market, well, we had that VWAP. We're trading above it right now for the second 30-minute candle in a row, but we do have Jax 1 down here at 114 even, and then below that, previous sessions lows at 113.25. So there are some targets here for sure on the bonds. So far, the volume distribution is a little immature. We'll see how that plays out as we go forward here. Let's pivot over to the Euro FX. We've been talking about that a lot lately. Today we have a little bit of a slowdown, right? We have a really nice sell-off that's happened over the last few days. We have the moving averages crossing under. The 8 crossed under the 21, and it's getting close to crossing under the 50. Right now, a little tiny baby green candle, at least baby compared to the previous big red candle, right at that 50% outside retracement right now. So we'll see if we get any kind of retracement back up. But again, this is looking a little bit bearish. We have this stochastics there in the basement right now. That might not mean too much, but we'll keep an eye on that. Intraday, we have some targets as well. Because there's so many decimal points, I had to increase the font size on my right axis so I could see it without squinting. So the top of the conversation is framed by the London initial balance high, pretty much around 14.93. Pivot is slightly above that, and then we do have that Jax level, that Jax 1 level, I should say, at 1.15 even. So that's a target for the bulls. If you want to keep going, you got that one-day max all the way up here as well at 1.1513. On the downside, if you are a bear here, you have that put support level. This is a pretty prominent level right here. Yeah, we kind of traded through it a little bit early this morning, but 1.1450. Previous session's lows are actually defining the lows of the moves today at 1.14370. So that's the story of the Euro FX. We'll keep tracking that to see if we resume that bearish momentum or not. And let's pull up silver while we're at it really quickly here. We'll just look at a daily chart in silver. and then we'll get to the main event here. Nice kind of sell-off here. There's some sellers involved right here. We peaked out up here at approximately 39.90. I don't think we got to that $40 level. The 8-period EMA is about to cross under the 21. It looks like, and today, there's no green candle right now. And on my VWAP, anchored VWAP, we've traded through it today. So again, this is looking a little bit bearish today. Stochastics, super bearish, looking like sellers are in charge of the silver market, at least for today. That is today's Edge Report. Back to you, Deli and Shai.
Thank you, Jimmy. In just a moment, we'll be joined by Velina Tchakarova. Shai, again, looking forward to speaking with Velina. We're going to be talking probably a little bit copper. We're going to be talking about some metals and some other things.
Definitely crude oil.
Definitely crude oil.
So,
quick preview of the data, though, today. We've got 8:30. I know we already talked about it. What are we looking for? Is there going to be impactful news or no?
We need to watch core PCE because it is the Fed's preferred metric. And so that is going to be very important. And of course, jobless claims and continuing claims, which so far have not given us any indication of a weaker labor market. So we'll see what the numbers look like today.
Yeah, we'll be watching the tape. All right, everybody. It's about that time. Let's bring Velina in and let's pick her brain this morning and see what's going on. Velina, good morning. How are you?
Good morning from Vienna. It's great to be here, and thank you for the invitation.
It's great to have you here. I've been following you on X for years. I feel like we've had conversations, only written ones. This is the first verbal one we're having, so great to meet you in person. This morning, obviously, we're coming off of a lot of things that happened yesterday, right? We come off of earnings, we come off of a Fed, and then we also have copper, which was really kind of the story in terms of commodities and futures markets coming into this morning. Coming into today, what are your overall thoughts on just this market environment?
Well, my angle is a little bit different one. As you know, I cover mostly geopolitical headlines. And right now, the big headline, of course, is the announcement by Trump on 25% tariff on India. Think of the context of the Indo-Pacific region. Japan got 15%. South Korea agreed on 15%, which was very important as a face-saving, let's say, face-saving measure to be on par with Japan. And suddenly, there you go, you have India with 25%, which of course was not accepted very well at home yesterday. Immediately after the announcement, there were big discussions in the political circles. And it has, so to say, the following message. It's not just about tariffs. It's not just about the trade asymmetry. It's about geopolitics. It's about the, let's say, realignment measure that Trump is trying to trigger on India, because India is meanwhile the biggest, let's say, Russian oil buyer, together with China. And what was really interesting, and I'm still trying to figure it out, is this announced penalty, because it's not just the 25% tariff, it's also the penalty being announced by Trump on India for buying Russian oil. And actually nobody can tell for a fact what exactly this penalty would be like. Will it be a sanction, let's say, on state refiners who are actually buying the oil? Will it be a personal sanction? We don't know yet. But all in all, you have to look at it in a broader context of strategic realignment. India is now being pressured to stop buying the Russian oil. I still don't think that this is going to happen. It's going to happen to some extent. I don't buy into the headlines that this is the worst moment for the US-India relationship, as some experts were claiming yesterday and today. I don't buy into this headline. I still think that there is a lot of room for, let's say, personal realignment between Trump and Modi. These two are actually getting along very well. And second, I think that India has a few options on the table when it comes to deals. And we know that Trump likes deals. So think of the opportunities for LNG. So I think that we might end up with some announcements on LNG, maybe some oil deals as well, nuclear, defense, and obviously maybe to some extent also agriculture. I'm cautious, of course, to give you too much information in advance in terms of speculation, but I do think that India has the space to, let's say, negotiate and agree. We will see a reduction of the 25 tariff. Short term, rather unlikely, but certainly the optics is not good from Indian point of view. So they probably will try to at least reduce it to 20%. And at the same time, let's be realistic when it comes to the relationship between India and Russia. I think that right now the tactics here is for Trump to pressure India and to some extent also China to actually exercise pressure on the Kremlin for the ceasefire. Trump wants a ceasefire on Ukraine. But long term, I just don't see how India would actually deteriorate its relationship with Russia, because it's not just about the oil. Meanwhile, 45% share of oil supply in the energy mix of India. It's also about the gas in the future, given the fact that India wants to become, and probably will become, the third economy in the world by the end of this decade, is going to be about huge gas demand. This is good news for American LNG, but it's also going to be a good news for Russian LNG. So we are in this competition right now. And in that sense, Indian economy will be in a need for diversification. Third point, of course, is about reconfiguration of supply chains. Right now, we are already observing a successful partial reconfiguration away from China towards India. This is good news for the US. In that sense, I think that there is a potential for, let's say, getting a better deal out of this 25% tariff, because companies like Apple are considering India to be this kind of solid future customer for and production hub for the diversification away from China. So in that sense, it doesn't make much sense to me in geopolitical terms to deteriorate the relationship with India. Last point, it's about Indo-Pacific. And of course, when it comes to Indo-Pacific, yes, manufacturing, we have also steel, aluminium. Here we have already the 50% duties. I already mentioned the Apple issue, which is already quite big. I mean, it's very successful meanwhile. And then we have, of course, textiles, garments, and the pharmaceutical companies. So these are actually the 4 or 5 big dimensions that we need to consider when it comes to this particular relationship.
Yeah, and really Apple is something that the entire market's keeping an eye on right now, because obviously it's the one that's not rallying.
Right.
And people have talked about how that has really turned into more of like a bond. You know what I mean? It's just, it's not really. So Velina, just so you know, we've got some data coming out here in less than a minute. I'm going to have Shai preview a little bit of what that data is. We'll be watching it so the traders can take a lead as to what potentially may come from the market. Shai, what's coming out here and what should we be looking for?
Right. So we have initial jobless claims, which are supposed to come in at 224,000 pretty much what we've been seeing for weeks now. Continuing claims 1.953 is expected. That's what we've been seeing for weeks right now. What we really also need to be paying attention to is core PCE, the Fed's preferred inflation metric, and that is surveyed to come in at 2.7%, no change from the last time we reported, and then PCE price index, which includes energy and food, which core does not, is supposed to come in at 2.5%.
Got it. So that data will be hitting the tape any second now?
Just waiting. Sorry. All right. We got jobless claims first. Came in at 218,000, so lower than expected. Continuing claims also lower than expected at 1.946 million. Core PCE came in a tad hotter than expected at 2.8%, and PCE came in hotter than expected at 2.6%.
Quick kind of rundown, Shai. What does this mean overall?
So it means the labor market is looking okay as far as jobless claims are concerned using this metric, and we are seeing an uptick in inflation in core and PCE.
Yeah, very muted response from the markets today. We look forward to more data later and then some earnings later after the close. Velina, back to you.
Yeah, Velina, I wanted to talk about, we had the deal with the EU, right? We had this trade deal. Well, it's not exactly finalized yet, but we do. And we are told that the EU is going to spend $150 billion in U.S. energy. Now, is this even possible? And can you talk about that a little bit?
Thank you, Tracy. That's a very, very good question. So first and foremost, the European Union is representing 27 member states and is in charge of, let's say, getting these kind of trade deals. Right now, the European Commission and Trump administration reached a political agreement, so it's not binding yet. And you are absolutely right that this political agreement included also very interesting, let's say, agreement on energy purchase. Mostly it's about LNG, which is quite bullish signal actually for American LNG. I think in the next few years, starting with 2026, 250 billion US dollars in annual volumes were promised. And I don't think that this is a realistic number yet, given the purchases so far, and also given, the energy demand as well as the, let's say, energy mix of the European Union members, for the moment. We know for a fact that still the share of Russian pipeline gas and LNG has to be replaced. And ideally, here I think the political agreement is to replace it with American LNG. But think of the infrastructure. So there are, for instance, countries that do not have the access to LNG terminals, and they do not have the required infrastructure to get the LNG via third countries. Okay, so we have infrastructural problems. We have problems, based on the different energy mix in each of these countries. And then I think that a huge problem, as Tracy, very well, covering European, problems linked to economy, industry, and energy. We have also a huge problem with reindustrialization on the old continent right now, which is very much also linked to energy demand, which has been shrinking, including, the whole green agenda, the decarbonization goals, and so on and so forth. So all of this put together doesn't make much sense to me geopolitically, how it will actually meet the requirements of 250 billion. But let's assume that even if half of this would be achieved, it's already quite bullish signal for the markets when it comes to LNG.
Velina, we have to end it there. Thank you so much for your time today. A lot to digest coming out of this conversation. Thank you so much for opening our eyes into other things besides just today. We're so focused on Fed, copper, everything else, getting back into the energy space. All these things continue to be important issues that we will continue to cover, and we look forward to having you back. Thank you so much for joining us.
Thank you for your invitation.
Any thoughts coming off of Velina?
So that's great. I really wanted, I like that she covered India because there are so many American companies that are moving over there, and, that affects chip makers, a lot of tech, in other words, that are in the index market that you're trading. So
Yeah.
I think it's very important, and I think it's, kind of I just like to kind of get what she's thinking geopolitically and what that means for the internals of our markets.
And also, it's like it's another tariff deal that's not done. But I think the way that the market expectations are, the fact that the market is not really reacting to this, Apple is. I mean, Apple's not doing much, and this could be part of the reason.
Right.
Again, if this, I look at President Trump and what he's been saying, it seems like a lot of what he says initially is worst case scenario first.
Yep.
So market, again, is anticipating probably a better case scenario. So it's like, again, he continues to set things up for good news.
Right, absolutely. And I think the markets are, I feel like the markets are reacting less and less to some of these,
Sure.
time bombs that he lets off, because we have seen over and over again that he does, start high and negotiate something lower.
I could see how people outside the U.S. look at this and what's going on. If you're from the U.S., like I'm from Chicago, he's from New York. I mean, this is
kind of what you do.
I mean, this is what he is. I mean, this is how he negotiates things. So anyway, great stuff. One last thing, data coming out the rest of today. What should we be anticipating out of this?
I think it's going to be non-important. You have Dallas Fed PCE, which just covers that Dallas area, and Chicago PMI, which covers the Chicago area, and the natural gas storage. So I think for the rest of the day, it's going to just be headlines that you're going to have to worry about, or any executive orders that come out.
Yep, and we'll be watching them in chat coming out from you.
Absolutely.
Thank you so much, Shai.
Thanks.
All right, everybody, make sure you go and also follow Velina and everything that she's doing. We will have that link put for you in chat. Pharm, good morning.
Good morning, Deli. We certainly summoned a little bit of volatility yesterday, didn't we?
Yeah, and again, what I think is interesting is earnings taking precedent over FOMC, right? If I took anything from yesterday besides don't buy a falling knife in copper, that was it.
Oh yeah, I was max long copper yesterday. No, I wish somebody's got that story, right? Okay, so I was long copper, and they're gonna have a great story. They're not very happy today, but someday it'll make a great story. What a crazy thing that was. So, but yeah, no, I agree. I like the fact that we're focused on earnings. I mean, that's how it should be, right? Instead of headlines and Trump tweets and things of that nature. I tried to listen in to J-Pow yesterday. I was watching 3 of the kids, so there's a lot of screaming in the background. But, I mean, it seemed to me not particularly dovish, so I wasn't too surprised to see some selling. Of course, it ended up just being that look below and fail trap of that 4-day balance range. But I prefer that we're looking at earnings because, really all, that's what matters in the end. A lot of these things are inputs, tariffs and, Fed policy, but they're all inputs into ultimately what matters, which is earnings. So I prefer it this way.
Yeah. I mean, and for everybody to put it in context, when you had Powell talking yesterday, I think, Shai was talking about, he was talking more hawkish than dovish. And ultimately, that's just saying to me, look, I'm not cutting rates anytime soon. And again, I look at that, I don't look at that as bearish. I look at that as we have price stability across the board. We talked about this. If companies know what rates are going to be, if they stay a little higher for a little longer, money always finds a way to make money, right? I mean, that's the reality of it. I mean, it's when we don't know the future of interest rates, we don't know the future of who the next Fed chair will be, what policy will be. That's when markets really get, kind of screwy and volatility can come in. So I think that for what Fed Chair Powell has been talking about lately, I think actually a lot of the macro people that come on this show would agree. Like, look, you probably should have or could have cut another 25 to 50 basis points, but at this point in time, with inflation creeping in a little bit, maybe you don't have to do anything right now, and that's okay. And markets saying, look, we're getting what we want from tariffs. Again, worst case scenario with President Trump, that's the way he starts with. That's just the way he is. He's, like I said with Shai in the last segment, it's like, look, he's a New Yorker. That's the way he's going to negotiate, right? And eventually he wants to report good news, and the markets are onto that now. And so I think it's interesting because we're in this sweet spot where we're at all-time highs in the middle of summer. Earnings are beating. Volatility and volume are pretty low because you don't have a wide amount of participants, and this tape is just drifting higher. And it's like, look, as short-term day traders, I think you got to kind of just compartmentalize that and say, look, at least I know there's not something driving this tape behind the scenes too much to know that, look, you could trade this two ways. I've said this a lot, don't overstay your welcome on the short side. As you say, just rent them. Because if you stayed short again yesterday thinking this is the top, or people that are getting aggressive into it, there's too many things that are coming into the tape that support this trend. And even the bulls are going, wow, I can't believe this is happening. So understand that that's the environment we're in.
Yeah, that's right. I mean, with respect to the market's reaction to a little bit of a hawkish tone, I mean, looking at your daily chart for the last 2 years, what about this market suggests that this market needs rate cuts to go higher, right? I mean, there's absolutely nothing, no reason this market, needs cuts. Like that's ridiculous. You can talk about sectors and pockets of the economy. And the market there. I mean, there are some segments that are just getting absolutely slaughtered. Horrible bear markets in certain pockets. I mean, look at UPS is like basically at COVID lows, Lululemon at COVID lows almost. I mean, there are some companies getting absolutely slaughtered, but that doesn't necessarily have to do with rate decisions per se. So there's a lot of blood in select pockets, but we're also in the middle of a huge boom in bull market in AI. So. The market is very resilient.
That's right.
Whenever I see some kind of reaction on like Fed cuts getting pushed out, you get an immediate algorithmic response where you get some selling. It's like, yeah, okay, we'll see if this sticks, right? So yesterday was a wild day. It was fun. I usually don't trade FOMC days, and I did yesterday. Fortunately, it ended well, but it doesn't always. And you're exactly right. I mean, it's so easy. To look at price just going straight down and get bearish and stay bearish. But once we basically back tested, let me get the ES chart, I'll pull that up. We basically back tested a prior 3-day balance range, the top. I posted it on X in real time, like the SPX box top, that prior 3-day range, like that's the spot. If that spot's lost, then, we were coming down another 50, 60, most likely. But once that holds, it's got a shot to reclaim that 4-day balance range. We closed like right in it. I mean, it was dirty. I will say it was kind of dirty. Just that we closed right back in it, and then earnings and boom, traversed right back to the top. So it was kind of sick. But if you were managing your risk and just renting the shorts, you did okay. And honestly, the old me, even a year ago, I probably would have just caught the short. Covered some and then just round trip my runners. And so I was glad that I actually did flip yesterday, because it's just, this market's been wild, and holding on to any bias on the short side, it's been an absolute disaster. So fun day for sure.
Yeah. And I think that continues to be the case, at least for now. I know that we'll probably get some more tariff headlines. We talked about India today and China down the road, and I think that it's going to spur some volatility in August, maybe September. But coming into today, going to start off with the copper chart. Obviously, everyone's talking about it's crazy, but let's also not forget copper had that big move higher way back when. And so when you're dealing with commodities, everybody, I'm going to say this again over and over again. Work your stops. Understand you have monthly expirations. These are physically delivered products. Futures prices set the price for the open markets, and this is what's possible. when you get something that has a shift in how physical delivery will be made or how much people are going to be taking in and so on and so forth for products like this, these are the types of moves you can see. And this supersedes technicals. Doesn't matter what your chart says on copper. It just is what it is. And so understand that you come in today, if you're trying to either pick a bottom or you're trying to sell into this and you're looking at some things on your charts, and I know your charts are all you have to go off of, understand at the end of the day, it doesn't really matter what your chart says right now, unfortunately, because when you get near expirations and you have things that are going on with fundamentals, people that have to do things, to put it bluntly, they don't give a shit what the chart says. They just got to get in and they got to get out. I've seen it firsthand. I think it was one of the best things that I could say about my career and like the way I was able to start. I actually started in the meats. I was actually able to watch live cattle, pork bellies, which doesn't exist anymore, and watch how the flows came in near expirations, and how all that volume comes in, and the way it comes in kind of sporadically. Those people are ranchers or whatever part of the business that they're in, coming in to actually hedge against physical stuff. They're just coming in and they have to do stuff. And they're just like, I got to buy them. How many you got to sell? Buy them, buy them. I mean, it just is a very different mindset. And that's why you always have to be aware and understand that when you get into commodities, that this type of thing can happen. It's not surprising that much to me. It's obviously, it's always like a, whoa, what was that? But looking at copper, again, I'm not even going to go over the technicals because, as I said, it doesn't matter. This is more of a physical situation. But watch for this trade as it finally calms down. We'll be following what Shai says, and I think it gets back into. I think it's going to be. I mean, going to be continue to be volatile. I mean, let's keep an eye on it. I want to go to gold. You know what's interesting about gold, Pharm, is that like gold, it's like, look, it's in this massive consolidation. If you just go back and look at June and July, you feel like gold has done nothing. But when you go back to the beginning of the year, this is the yearly chart in gold, it's the strongest market that we have. And every chance it gets to get bearish, it just gets bought. Shai talked about this as well. Into every expiration, even with gold, there's a little bit of a gap. They come in, it dips down maybe a little bit, and they just come in and buy it. And when I say they, I mean, they. When you look at gold, it's like, again, I think this is probably one of the best day trader markets out there right now because it's a two-way tape. It's a massive consolidation near a high with a primary trend being bullish. That creates a lot of opportunity. You've also got the micros and you've got small products. You got the 1 ounce gold. And so I like this product a lot more than I like over what indexes are doing these days because there's just constant opportunity. It continues to trade in decent ranges and volatility remains there. From a longer term perspective, I only see gold starting to get some pressure on it if it takes out these, low 32 or high 32, 90, 80-ish areas levels out. Then I could see a pullback down to 3,200. Until then, until these lows get taken out right in here, I think gold is just sideways two-way tape for day traders. I want to go over bond market again today. This, to me, when I look at the bond market right now, bond market is looking pretty bullish. Coming off of a hawkish Fed yesterday, it gets interesting. The long end continues to rally, coming off of an FOMC that was, as we've said, hawkish, which hawkish just means that, rates more than inclined that they would go higher than lower. But the bond market's saying, I don't think so. And I think this also helps the rally in equities. I've said there's a time to watch bonds. There's a time that you don't have to watch bonds. I don't think you have to watch bonds right now as a short-term day trader. They mattered the other day. We got through QRA. We got through Fed. Now bonds are somewhat bid. It's like, okay, if anything, it helps the cause for the equity indexes because long end is going down. That helps long-term interest rates, which in turn I think is better for potentially the U.S. economy. We'll see because of debt and all sorts of other reasons. But I look at that and say that doesn't hurt stocks right now. And so big picture there, I wanted to go over that. And then last thing, I wanted to go over, obviously, U.S. equity indexes. Actually, I'm going to go over the euro first here. Let me shift gears. The euro is below my box. It was just, again, we had that sell-off in the euro based on the tariff headlines with the EU. It continues to get weak here against the dollar. Just a trade I couldn't get in, really, because it happened on a Sunday night and the move was lower. But euro now, watch out. As long as it stays below here, I think it's continued weakness. And what's interesting is that, you get a little bounce today. The euro weakness with a little bit of the dollar strength, again, is not impacting gold. A lot of times gold will go with euro. Gold said, you go do your thing, euro. I know this is a tariff thing. I'm not worried about it because those are a really good correlation to watch. Euro gets weaker against the dollar, and it's not impacting any other markets. It's only to this area right here. But again, I think the euro volatile, good trade for day traders right now. Last thing I'll get into is the S&P. When I look at the S&P right now, again, I've been saying it. This top Bollinger Band peak is the only place I think I'd look for some resistance, 65.36-ish. If it gets up in there, I start to wait to see if my strategy gives a short signal. Until then, sideways to grind higher. I mean, why try to fade it? Again, rent a short, right? I think that's something that you should have a T-shirt that says rent a short for right now. And I know that the more we talk about this, the more likelihood that the big break is coming. And if it does, great. I think for day traders, understand that if all of a sudden we start to get a sell-off, great. It'll be very transparent. We have no breakdown of technicals across the board. Look at NASDAQ, just hugging around the 8-day and 21-day moving averages. Just can't even get below them. And it's like everyone keeps trying to call tops, and it's like, okay, not everyone, but you see a lot of people on social. Oh, it's just not there yet. 23,928 in NASDAQ. That's a peak that I will look at. If it gets up in there, which is only 130 points away, maybe we see some resistance there. Aside from that, to me, I go to you for the inside tape. It's all about, trading it intraday right now, keeping it small and smart, and don't outstay your welcome on the short side. I mean, that's the way I think you have to approach this environment. I hand it to you now, Pharm, and take a look at your charts.
Yeah, that's right. I mean, sellers had control, and it lasted about as long as, well, I mean, the joke on that.
Yeah.
Wait, what's this? My wife's texting me. Sellers lasted longer still. Oh, come on. Anyways, yes, I mean,
saw
that's
that
what
text
it is, right?
She CC'd me on it.
Yeah, the world, right? Good fun, right? I mean, NQ is just nuts, right? I mean, YM, RTY look not that great. RTY is maybe coming into a multi-week balance kind of range low. Maybe it can find its feet. We get some breadth widening out, next week or the week after. We'll see. But it's been all NQ, right? And you looked at to start the week where we're building volume, and we talked about this just kind of above the meat of last week's primary distribution. We had the pops excursions higher, putting in these nasty highs. But like you said, I mean, no technical damage done, not even close. I mean, until at least last week's volume is trapped off sides, it's hard to really be bearish, right? I mean, they couldn't even yesterday. They couldn't even really get to the far side of last week's primary distribution, basically like 330s. They couldn't even make it there, and I think most of that was because of where ES held, and then just like the bulls kind of came in and went crazy. But I mean, that was a pretty epic failure. The fact they couldn't get all the way across even definitely had me looking at that ES spot to get long. So, but like still, what are we doing here, right? I mean, what's this profile going to look like after today and tomorrow? Are we just going to keep going higher? And I mean, look at this. Like, this is comedic to me, this profile. I mean, it's got to find some kind of area to build in some volume and make this a clean double distribution to the upside. Otherwise it just sort of leaves, a pocket of air of poor structure behind. So it'd be nice to see it like just pause for a minute, and not see something like you saw a couple days ago where you just get a nasty high and then sell off back into range, but really find some acceptance in some kind of a consolidation range, and maybe like a 170 180 handle range somewhere up here. Maybe it's the 900s. Maybe we do make a new high, let's say 720 to 900, something like that. I mean, it's got to find some place to consolidate, instead of just leaving, a paper thin stick at the upper part of its profile for this week. So, I mean, we'll see where that's at, but it's clearly the strongest, and no reason to fade this with earnings doing what they're doing. We have some more earnings coming up, but I mean, like, it was kind of a double whammy yesterday with earnings, right? Because like, not only did, Meta, and I didn't look at it very closely, but I mean, not only did they beat, but they also raised CapEx. So it's like, you've seen some of these earnings where like the company doesn't really perform that well, but they raise CapEx. So like semis go bid, right? NVIDIA does. And this was kind of like the double whammy. So this was a pretty good look with respect to earnings, I thought. So NQ very clearly the strongest. I mean, as long as it doesn't get back below this prior high, I think that starts to look a little bit iffy. You have this massive broadening formation here. You can see just higher high, higher high, higher high. And then you've got lower low, lower low, lower low. So it is broad out there. And like the potential risk would be to fail back into this prior range. But I mean, I think it's fine until, yesterday's cash hours high is way down here in this 586 to 600 range. So, I mean, like even if, something crazy happened and we collapsed all the way down there, it's still a true gap up. Like we're so far from yesterday's cash hours high that any kind of a sell is probably just going to look like inventory correction, and you just wait for it to find its feet and then look to get long. I'm not even in the mood to try to be short for an inventory correction today. So that's the NASDAQ anyways. Let me pull over ES here. On the daily, we started there and we talked about this sort of narrow 4-day balance range that we had, right? And so the trades off of that are, you can go with a breakdown that sees continuation as a short, which isn't really great in the bull market and bull trend. You can go with a breakout that sees continuation to the upside. That is okay. And then you've got your look below and fail, your look above and fail. And we got that look below and fail, closed right back in range. Just right there. And then Rip City on earnings. So that was a nice little trap. And you can see that it kind of came back down to this prior 3-day balance high. The cash hours high was 74. Back in here, I was using 69 to 73 for my weekly level to cover that spot. And it kind of just wicked right below there. But, the interesting thing about ES is like it really hasn't gone anywhere this week. If you think about it, I mean, we've got this huge gap up on Sunday that went to like 59, I think might have been that high. And then we've spent the entire week below Monday's cash open, which was 29. So you've got last week's high, 31. You've got Monday's cash open, 29. You've got yesterday's cash hours high, which I want to say was 29 and 3/4. And so as long as you're sustaining above that, I mean, bulls have no excuse to give this back. Like they really should. After this trap and this failure from sellers, I said in my plan, like there's no reason not to lift it. And they certainly did overnight. And now let's just see them sustain that through cash hours. And again, like the weakness is going to come from presumably non-tech. But you're in a situation where like if you're trading ES, I mean, you kind of still have to keep an eye on everything else because I mean, even if the big tech names like start to consolidate and pause a little bit, but like everything else that's in their components is just getting slaughtered, then you continue to see ES be relatively sluggish and heavy. But I mean, again, like dips are being bought. So like even if you're short for something like that, which I'm in no mood to do today, which probably means we're going to limit down since I'm not in the mood to short it. It's got to be a quickie basically. So ideal is to sustain into the morning, and I'll flip over to the 5, I suppose, for this, but ideal for this morning is to sustain above that 37 to 40 spot. And that 40 was the high from whatever day it was, Tuesday, maybe. So you do want to see some kind of a clean break away from the established range for this week. You've got to find acceptance above the cash open of Monday for this week. I mean, the Sunday open was 64.50. I mean, so we haven't spent a single minute of cash over 64.50. And so like we really actually haven't gone anywhere. I mean, as much as it looks like we're on the moon and it just keeps going up and dips keep getting bought, like ES hasn't gone anywhere. So if we get some widening out of breadth while NQ stays at least firm, then maybe that gets ES going and you finally get some follow through. But otherwise, it seems like there's not much reason for breadth to widen out just yet. I think it's close, maybe. But you just had some really bad earnings in some of the non-tech names. So we'll see. So that's the first spot, 37 to 40 I'm watching. So that would basically be a true gap up above the entire range of this week on a cash hours basis. And so as long as that's holding, buyers are fine. And then you've got the actual true gap up, which would be this 29.31 spot. So that would be last week's high again. It would be yesterday's cash hours high. You can see it there again. I think it was 29 3/4. That's fine. And then the weekly open. So I want to see this clean break. And then the next couple of days, just never even come back below 29 to 31 outside of like a minor wick or something. There's maybe I'll provide an allowance for a quick trap if there's like some news bomb or something like that. to 21 to 22 range, maybe 23. I was using yesterday. We had some single prints on Tuesday, I think, in the 23, 25 range. So, I mean, if you got a trap down there that reclaimed 29 to 31 and ultimately 37 to 40, I think that would be okay. I don't really see any reason to see that. But to me today, the only trade that I see as like a setup that I can plan for is just trading this true gap up. And I hate trading a true gap up if it doesn't see some kind of an inventory correction pullback. And like it kind of did overnight a little bit, at least cooled off, right? So I'd love to see some kind of a snap liquidation down into one of these spots. And I'll look to get long and, again, not really looking to get short. I think we might still have some open overnight single prints. I don't see them as being particularly strong, but, 48 to 50. I mean, if sellers can't even get down, again, call it 48 to 50 in this range here where this volume tapers out, then you just kind of got to slap them long. And, last thing, clear and obvious oversight on my part. I did not have 54.69 as a weekly level this week. So I don't know what the hell I was thinking. I'm going to have to reconsider everything about trading I thought I knew. So that's what I got, Deli.
I mean, for sure, I'm thinking to myself, he's got a limit there. There's no, how do you not?
Yeah.
Very surprised at you with this. You missed it.
I got to go back to the drawing board.
I think we're going to be up. Now, if we get up 69 points on the day, is that an auto short too? What if it would be 69 and 69? So that's 10. That's 65. Nah, didn't work out. A double would have been interesting.
Yeah.
Right?
At this vol, if we're up 69 handles, you got to short it probably. I posted on X on Sunday night when we were trading up 64.50s. I'm like, yeah, good luck if you're long. Given these vols, it was above the straddle for Monday, and the whole damn week is traded below that. So we'll see. But yeah, looks good so far. We'll see what happens, what kind of crazy news we get, and how earnings goes.
Yeah, that's right. All right, Pharm. Chat remembers that you were called a tick pimp yesterday, so it might stick. We'll see if he changes his handle temporarily. We know why.
Yeah,
I was laughing about that all night yesterday. Yeah, always a lot of fun with you, Pharm. Thank you so much for your insight going into today's trade. Everybody, give Pharm a follow on what he's doing on X. Check out what he's doing on his Substack. Pharm, it's our weekend day. It's our Friday. I will see you on Monday. Have a great weekend.
We'll see you Monday, Deli.
Tanya, good morning. How are you?
Good morning, Deli. I'm doing great, honestly. I'm kind of shook at looking at this daily chart, honestly, from the markets. It's kind of hilarious, like Pharm was saying.
Yeah, I mean, look, you come in yesterday. We were, on our way for a little bit of a sell-off with Jerome Powell, and then, those damn earnings got in the way of it, and ultimately, kind of, snuck in there and took the volume and volatility out of the market again overnight. Here we are back on the auto bid, but it is what it is, right, Tanya? I mean, you got big tech continues to just push everybody higher. People were talking about it. Rodney Dangerfield of futures indexes, the Russell's down 0.5%. Dow is only up 80, which is like 0.25%. Nasdaq's up nearly 1.5%. S&P's up almost 1%. So we've got these divergences again, and it just is what it is, right? I mean, it's like, we have a tape that maybe not everybody loves for the indexes, but it's the tape that we have. So how are you looking at it coming into today's trade?
Totally. It's like, it's like hilarious, honestly. It's just like the thing is, I thought it was hilarious how we had an outside candle here to got previous daily high and low, and then we had another one the next day. And then like you see like on the actual day before earnings, we pretty much closed around where we opened. It's such a small bodied candle on the NASDAQ. And then like you said, then earnings, like we talked about, like the real like news yesterday was earnings more so than the Fed announcment, the Fed rate announcement. So here we are at all-time highs again, gapping up, right? So if I go to 4 hour, quite the large push up there. I mean, what ended up happening yesterday, I was like we talked about, was more looking for shorts. I kind of like missed one short by just being distracted a little bit by my chat. But then I said I'll look for, if London low breaks, I'd look for more downside. And then that happened. I got like the alert for that. Maybe like it was like lunchtime. And then I took a look and NASDAQ wasn't near its lows. So I just like, I wiped that out. I was like, okay, I'll just wait until after the afternoon. And didn't even end up taking a trade yesterday. It was kind of crazy. So here we are, we're at all-time highs. I mean, you got to work it with this gap essentially, right? I really don't love trading stuff like this. Yeah, we have this like this is where the open was, so I can mark that out also for ES and NASDAQ. So I'm just gonna mark out this leg and see where we are. I mean, it's just so hard because I'm not shorting this. Like the shorts are so short-lived. Actually, I could short it. Never mind. I could short it down if I see something on the lower time frame. Kind of same vibe as what we've been looking at. If there's a divergence at the high between ES and NASDAQ, I would look for like the same thing from like 2 days ago. If I were to short it, like if maybe NASDAQ even takes out the all-time high again and ES doesn't, and then like we get some sort of short-term market structure shift for me to short it back to into this range here. But honestly, it's just so difficult. If I look at ES, like it came back into that daily fair value gap I wanted it to get to short it to, and it had such like a crazy good reaction there with like just wicked it, and now we're at all-time highs again. So to me, it feels like maybe today will be mostly could be just consolidation, honestly. I mean, I'll check out how the first 10-15 minutes of the day go. But I'm looking at like we don't have more news, red folder news for the rest of the session. Tomorrow we have NFP. Oh, I really don't like trading the day before NFP, to be honest with you. So I mean that's the only kind of game plan I'd have. I mean, if we have a divergence at a low, maybe NASDAQ takes out a pre-market low and ES doesn't. But then I'd honestly feel like I'm buying in a premium. It would have to be kind of convincing for me to want to long all the way up here right now. Let's see. Yeah, I mean, like you said, it's just like it's auto bid, right? So it's like, okay, if you buy now, like you could put a stop at pre-market lows, we totally can take out a pre-market low before at the open. So that's why I'm always like hesitant of that. I could mark out the gap up from the new day opening gap. So like where we gapped up from here where we open, that's in a premium. So if the market's so strong, maybe it'll dip into there and then blast off from there. That's what I'll mark out. But other than that, I don't really love the type of market I'm getting to work with here from the overnight and the earnings action. That's kind of what ends up happening though during tech earnings. Sometimes it'll just blast off without you, or it'll play out your plan without you. But then, unless you're gambling earnings, then you can't really do anything about that.
Yeah, a couple of things to talk about. So yesterday set us up for two things. One is now we have earnings at the close again today that are going to be market moving, likely, right? Because now the market, after coming off of earnings yesterday, you're going to have likely everyone goes, well, let me see what happens on the close with these earnings coming out. And also what the Fed did, which Shai talked about earlier, put a real emphasis on the jobs numbers. So therefore, it emphasizes more of what potentially happens tomorrow morning with jobs. So now you have a day like today that's reacting to yesterday. You had this two-way tape where you had the sell-off off Powell, offsided by what's happening in Meta and Microsoft earnings, and now you have that clash. You've got divergence in indexes. It really just is. It's just about being small right now, knowing that the market is now looking forward to these next two things: earnings after the close today, and tomorrow's unemployment. I think is going to be a decent market mover coming off of what the Fed had said, and Shai talked about that a lot this morning. I want to get to the poll with you real quick too. Bullish 53%, bearish 25%. Neutral 23%. And just like that, Tanya, we're back to what you and I see almost every morning when we go over the poll. It's almost the same numbers.
We're back to 50% bullish. It makes sense that, I mean, Powell said that he's putting more emphasis on jobs numbers, and today we could just I think the morning could definitely be consolidating in a smaller range. given we're gapping up, no more red folder news, and tomorrow is NFP, that I'm kind of prepared to see a small range this morning. And
Would
yeah, like the bull is hilarious there
Would
with
you- yeah.
with going back to 55%. It makes sense. Hey, I think most of them were
Yeah.
like neutral yesterday, and it shows that, and they were kind of right. Yesterday was a lot of back and forth. And the morning kind of sucked yesterday.
Yeah.
I think 50% of my chat didn't even take a trade yesterday. I didn't take a trade yesterday either. Hopefully today is a little bit better, but I don't really have high hopes of considering the earnings after hours.
I was going to ask you, take a look at gold for us, because gold's been pretty busy, and I really think for a lot of day traders, it's a pretty decent market to look at. I'm curious what your thoughts are on gold coming into today.
Okay. Cool. Sure. I'll take a look there. Let's see.
And actually, I want to say too, also really good discipline on your part and all those traders that didn't do anything yesterday if they didn't have a setup, because it was finally a little bit busy and very easy just to step in and trade some action. Because when you haven't had it in a while and all of a sudden it gets busy, it really tests the discipline and the belief in you sticking to your strategy. Not easy to do.
Totally. Like, let's see here for gold. Okay. Yeah, it's totally a different kind of market. Let's see. Actually, I think I can just put on this one so I can have a better view of it here. GC. I can have it all sorted there. Okay. Gold. The daily. To be honest, yeah, it looks damn. You know what I kept mentioning to my chat when I looked at gold in my channel, the show, and he was talking about on this day, actually, he said, we had a 3-day up move, like I wouldn't be looking for longs here. And then he was very correct there. He made a good call there. Ended up like it swept that previous day high, and like it lost all its steam back down to the downside here. Yeah, I mean, gold has lost its momentum to the upside. It's kind of interesting because everything else is kind of all-time highs. Let's take a look here. The weekly. Took out previous weekly lows. It's honestly, it looks like it might be heading down more. I would probably look for some gold shorts. Let's see. I think we were talking about this a
What's
few
funny
weeks
about
ago.
gold,
Mm-hmm.
it's lost its momentum, but it's also hasn't really pulled back much either, right? And so it's like kind of
I
like
know.
at some point, if it does break down technically, I think it gets pretty busy.
Yeah, I know, right? Because like because of I'm just looking at this, and like every day was a pretty big down day there. We're coming back into this. I mean, it looks more kind of like a V shape here. I wouldn't just be shorting inside of this FEG here if that's what I'm thinking of. Like I'd take let's see, on the 4-hour. We never retraced to any sort of, like if I'm looking at the legs, it went down and never retraced this leg to 50% of it, or this one, or this one. Like, let's see that from here where 50% of the range is. I would probably look for that. Yeah, I wouldn't just go blindly short in here. I would probably wait for a pullback to 33.53s, and then I would look for more downside if it loses steam there. I think that, yeah, we took out a good amount of sell side now with this push lower. And I think that 32.49 is vulnerable. Let's see, any more downside possibilities. I think that, yeah, like yesterday, I mean, right now where it has pulled back from, like it's pulled back like 32.74 to 33.03. I think it has potential to come back and take out these highs, because we just didn't pull back at all there. Like these previous daily highs, because we have a daily fair value gap as well here. So I'd more likely look for a potential long situation into this gap, this area, and then see if it fails, and then go lower for gold, honestly. Yeah, we'd have to take a look at that. I think it expires. I have to roll over to my next contract actually for August next. But
We're at
I mean,
This is the front month now, and we're caught kind of in between the 2 months right now.
yeah, yeah. I was just noticing. I think it expires in August for gold. So, um, yeah, I think that we took out some previous from sell side. I think that I would look for it to retrace. Like we just had a pretty fast move lower. Look for a retracement back to 33.57s, and then for gold, what I like to do is to see if there's a breaker in fair value gap, which is basically after it takes some highs, like a previous daily high, to see if it takes out the low that made the high, and then treat that as how other people say like support turned resistance. That's what I would look for in gold. Yeah, that's interesting, honestly. What are your thoughts on gold, Delhi?
Well, at least there's, to me, gold is, I think it's a two-way tape for intraday traders, and I think at least there's some volatility there where you can trade both sides. Equities, I just don't love them for day traders right now. I think that you got to be really, really picky. Again, that's why I said how you guys were yesterday, disciplined not to do something during a busy time. Hat tip to you guys, because it's not easy. I mean, I've never loved markets that are breaking up into all-time highs with divergence. Never been my favorite tape. And, for day traders, it's like you've got other markets that are busy. Take a look at those. But we got to end there, Tanya. It's our last day for the week, and last day for a while now. You're headed on vacation, aren't you?
I am. I'm going to Croatia. So I think I'll be back in like 2 weeks on the show, but I'll still be in Croatia. So I got like my whole Wi-Fi setup going, and it's gonna be fun. But yeah, I'm gonna be on vacation. I'm going to Milan first for a couple days to do some shopping, and and then I'm gonna go to Croatia.
Oh, I love it. Well, you enjoy yourself. You deserve it. Great having you here. Safe travels, and then we'll see you when we get back, or not actually when you get back, but we'll see you when you're out there in Croatia back on the show. Talk to you soon, Tanya.
Thank you. Have a good one.
All right, everybody, hit that like and subscribe button. We're pushing, we're above 140,000, but we're making a push for 150,000 followers. We're going to do a whole big show and giveaways and all that stuff. So help us get there so we could do some really fun stuff here on the network for you guys. Like I said, hit that like button for Tanya and the entire crew this morning. A lot of great conversations, but it starts getting fun. We're getting ready to trade the open with Christian. Christian, good morning.
Morning, Deli. How's it going?
Doing good, man. How are you?
I'm good. Another day. Market won't go down. I just got to keep buying those pullbacks until we eventually end.
Yeah, I know. And the pullbacks just get narrower and narrower. Yesterday we had some volatility. You probably heard some of the morning conversation. We had the tale of the two headlines. You had Powell talking hawkish, which I think is more or less not really that we're going to raise rates, but the fact that they're going to less likely to cut. You had the market move a little bit lower on that. No big deal. At least it created some volatility. And then you had earnings after the close, which beat, which we've been talking about a lot on this show. Earning expectations have been set low. The bar has been set low. Worries of tariffs. But big tech says, hold my beer, and they just keep pushing forward. NASDAQ's the upside leader, up 300 this morning, up 53 in S&P. Well, you have the Russell down 14, and the Dow is pretty much flat. It's up like 40-something points. So you have these divergences, Christian, when we get on these highs. I was saying it to Tanya. I've never loved a tape where you have, well, I never really loved earnings because it's always been a difficult time for the indexes because a single name or two can really push and pull the tape, which is what we saw yesterday. You tack that on with FOMC, now tomorrow's NFP. I think for traders, they got to kind of look past that and say, look, that is what it is. I can't control it. We look into what the day is, but understand that the environment is being dictated a little bit like that right now in the short term. So coming to you and saying, let's take a look at the charts and what's the technical plan for today? Because again, that's all we could focus on as short-term traders.
Exactly. Price is the most factual indicator on the chart, and we must follow it and respect it. So I'm going to share the 4-hour, which is sort of that higher time frame structure that I like to keep an eye on. We were having like a 2-day consolidation in the last few days. We broke lower on that FOMC statement or that period. But all we did was come back down. And, this is something that you guys have discussed, that I've shared as well, is all of these sort of breakdown attempts are just going lower to test some sort of the next support area. That's exactly what we did in ES. We moved down into the 63, 68, 72 area, reversed back up. In NQ, we did the same. We dipped a little bit below this 420, 430, which was notable resistance and then support the last 2 days, which were great buy opportunities. We broke below it, created a big failed breakdown, and reversed all the way back up. So now we're starting a new, for those who haven't been with me for a while, we're starting a new 9MA uptrend, which is the sequence of higher highs, higher lows along a rising 9MA. And so now we get to live in that on the 4-hour, and we can see that we've reached the high. We're now attempting to pull back. If ES can hold the 64, 40, 43 area, sort of back testing this gap up low, resistance, and then now possible support. We don't know until we get there. If we can hold that area, maybe at the same time the 9MA in yellow moves up and we find support. And if so, we can push back up higher. If we form acceptance and we start to see sellers show up, then we can get a breakdown back into sort of the bulk of this consolidation somewhere here and bounce. And then again, if we form acceptance, then we can break lower. So we have 2 areas of support below us that we need to consider them as buying opportunities until there's more data telling us that, hey, no, it's going to fail. For NQ, it's the leader, much, much, much stronger. The first main area is this prior day high, 680s zone. If we can hold that on any pullback, we may not even get that low, but if we do, we want to see if we can hold that and then bounce back up. If we form acceptance, well, guess what? We once again come back down to that next support area, into the 550s, 580s, and we can bounce again. If that fails, then we go to lower prices. So with the 4-hour, they're telling us the structure, the hourly plan, where I create the trade plan, and I like to call myself as an hourly trend trader with a 2 or 5 minute entry model. So we did have another hourly 9MA uptrend on ES into 64, 68. That has ended. We're pulling back into first area of support, which is a 63, 40, 43 that I shared. You can see it was support here, broke through it here, resistance, some resistance, but we just chopped around. And then can we find support on the next test here? If so, we can test here or maybe just overnight lows and then revert back up into London's high. This process can be like a whole hourly consolidation until we find a directional breakout. Above 64.68, that leads to new all-time highs. Below 64.43, well, we go back down to back test yesterday's resistance. Strong, strong, strong. It should now be support unless we form acceptance and then break lower. For NQ, a little bit of the same. It is stronger, so you can see that ES is already coming down into that overnight low. NQ is not. So we have some sort of divergence there, but as long as we can hold any breakdown attempt into 740, we can revert back up into London's high and then maybe chop or just create an hourly range. If we form acceptance, which is some consolidation up here, we can break out to 890, 900. Below 740, we do have prior day high where we can see an interaction, maybe a big failed breakdown below 740 and back up, or we form acceptance here and then come back down to back test really this large consolidation here where we are looking to see if buyers step in. If we do get that low, obviously, I don't think we will since we're waiting on more earnings. So my objective today, like it has always been in the last maybe 2 months of streaming, to buy pullbacks into support because we remain in an uptrend.
Yep. No, clear and concise as usual, my brother. I love watching you each and every Thursday. Everybody in chat, hit the like button for my guy, Chris. Just love watching him. And I mean, it's just always clear and concise. I know exactly what you're doing. I've learned your strategy just by watching you each and every week, and I love it. And I think you're great for traders. You're great for the trading community. and we always love having you here. Again, also everybody, check out what Chris is doing on X. Make sure you give him a follow and tune in for him each and every Thursday on the network. Hit that subscribe button, and so you never miss an episode. Chris, have a great day, my brother. I'll see you in chat, and I'll talk to you next week.
Yes, sir. All right, you take care, Deli. All right, enjoy your weekend. All right, gang, what's going on? Good to see you guys again for another either Trappin' Thursdays or Earn and Learn Thursdays, right? I think mostly the last few weeks we've been on a roll, and it's been earning and learning. So let's see if we can do a little bit more of that again. I did wake up a little bit late. Not late, I didn't wake up late, but this reversal opportunity that you guys know I love was 20 minutes before I was able to get on the computer. So I was not able to participate in this push back up. But maybe we get another opportunity if we come back down into this 740s area, maybe take out overnight lows and see what happens. All right. But let me say hello to our friends. We have Juan Gabriel. Good to see you, my friend. Faina, always good to see you. Just another day. Star T, Sorona. We have Chuck. We have Shake. We have a lot of people from the group here. Disembodied Jesus. Good to see you guys. Cooper. We have Shake in here. We have David. David, how do I mark my levels? They are, I used to mark them manually. It took a long time to get these down, but I now have an indicator that does them for me for TradingView and Ninja needs some final touches. How am I using cumulative delta? I'm using it for divergences when we come into a support area. Is there a higher low in delta versus price similar to RSI? Ashwin, William, Michael, Bolivia. See, I always thought it was Bolivia, but it's Bolivia Ferreira. I messaged you back. I know you don't use Twitter that much, but I did message you back, Bolivia. Bolivia. We have Emilio. We got a lot of people in the house. Infinity, good to see you from the group. Ben. Faina is calling it Spicy Thursdays. We have two Michaels in the house. Fractal, good to see you as always. Adam, good to see you. A lot of people from the group. Butters, Brian, Felix, Lito, Matthew. Oh, we got Mikey Z in the house. I have an accent? What accent? Elijah. All right, we got a lot of friends and family here. So let's see what we can get. As always, you guys know that in these sort of opens, where we're in a range-bound environment, I am looking for pullback into support to buy if we set up that bullish reversal. ES did take out that the making money accent. ES did take out that low. NQ has not, so we do have a divergence there for now. But it looks like, oh, NQ just took that out. So we're both now under that overnight low. I used to call it London low. I was informed that my London low is not the correct London low. I will not change it. I will have to call it something else. It's going to become called the Chris Magic Line. But let's see what we get. Our first area of support, remember, is 740s in NQ and 640.43 in ES. So I am waiting to see, and this should not be red, it should be green, but can't adjust that indicator now. Hey, Bren, good to see you. Sounds good. No, Sergio, there's no correlation between RSI and delta. Those are two different things. All right, let's see. Do we have any divergences on larger timeframes into this pullback? Not on the hourly. How many minutes do we have? We have 1 minute into the open. Let's see if we get some sort of reversal here. We have 15 seconds. All right, so into that first area of support, and I'm looking for a, see if we set up a reversal here. I don't know if you guys can hear those alarms, but I need them. Got so many right now. All right, NQ a little bit weak. Let's see, we're getting a maybe the gap up was too big, huh? Oh, look at that. A little bit of a change in character at the open for this Thursday slot. Very weak. So we want to see now if, okay, so NQ's into prior day high. So we're not looking at scenario 2. Let me bring that over here. Yes, breaking through that 60/40s. So a little bit weak, huh? How are cyclicals doing? So we're seeing some rotation right now. Wow, NQ leading the way. All right, so let me share the hourly here because we're breaking right through that first area of support. We have NQ. We wanted to see if this 740s was going to be support, but you can see that we broke right through that. Prior day high is not even holding. So if we can continue lower, we're probably going to test this 580s area. ES is a little bit stronger only because cyclicals, financials, industrials are up. Maybe it turns into a failed breakdown of 60/40s, but you can see how it was support, resistance, possibly a failed breakdown here. Can we reclaim it and recover? Or if we cannot and we form acceptance, then we are most likely going to get a push lower into 64.18. For NQ, we really need to see if we can reclaim this prior day high in order to push back up. If not, we can form acceptance and then get to that scenario 2.1. So I think the main thing that I'm looking for here is to see if we can set up a reversal here. But we did go through a little bit of selling here at the open. There's no divergences on the hourly or the 15-minute. So maybe, you know, I don't want to call it a breakdown yet. On the 4-hour, we are into that 9 MA. So this is that perfect higher low spot. Hey, Tracy. Hey, Monk. All right, so let's see what can take place. This is that second area of support in both ES and NQ. Did I freeze for you guys? My internet, I mean, everything's working. I don't know what happened. I don't know if you guys can hear me. Ninja's working. Let me ask the group. Okay. So my screen froze. You guys can hear me and see me. I can only see Ninja. I can't see everything else. So until that pops up, I can't read any messages. So again, I'm waiting here for a reversal. Let's see how ES sets up. We're into that lower low, lower high. Maybe a failed breakdown of 64.40s. Okay, screens are back down, are back up. So we're good. That was weird. All right, for NQ, we're into that lower low, lower high. Can we break down further, or are we gonna maybe set up a bounce? But there's no, we don't have the structure here for the 9-minute reversal that I look to take. Thanks, guys. All good. Okay, I couldn't see any of that. Everything froze. All right, so we are into that 4-hour 9 MA. So this is really that first area that we need to hold. But it is a pretty weak open here. Maybe we are going to see some selling pressure. But again, look, you know, this is actually a good example. If you guys have seen my Thursday slots, I think over the last month, I've been focused on buying reversals at support, right? Well, guess what? Today's the first Thursday in the last month, maybe the fifth Thursday, that first support has not held, right? You guys have seen me take bullish reversals into that first area of support. This time it did not hold. So when you're considering reversals at support or any sort of trade, and you're aligned with the trend, you have to see it as, okay, 8 out of 10 times that support and my buying, if all requirements are met, I can make money. And there's going to be that 1 or 2 time where you don't make money or you miss this kind of breakdown, right? So this price dropped and maybe some of you guys are making money. Fantastic. But I'm not actively looking to participate in this drop because when you're in an uptrend and you guys have seen the last few weeks, what has served me the most? Buying pullbacks into support, right? So if that's my go-to, I am looking to buy pullbacks into support. If price breaks to do that, do I have FOMO for missing that drop? Absolutely not, because I know over time, 8 times out of 10, I will pull back into support and then will bounce. That other additional 2 times, that's fine, right? You have to be okay with missing moves because you want to align with what the market, the structure and the patterns that the market generates the most. And those are pullbacks into support into an uptrend. Do we see a top today? I don't know, maybe, right? Who knows? And maybe today pullbacks into support don't hold, but you can't really sort of isolate today's performance and say, oh, what happened? I did so bad. If you lost so many, you know, buying pullbacks, you can't isolate today's performance to the overall system, right? Or your overall equity curve. My little lesson there, because I talk to a lot of people who are, you know, they isolate one day's performance a lot into their emotions and their mental capital, and it just doesn't work like that. Like we always pull back in support in an uptrend. We most of the time, majority reverse. The one day that it doesn't, and you bought that and you take a stop, look, that's part of the game, right? So I'm just waiting here now. We're potentially building out that 9 MA consolidation where we're consolidating. Can we bounce up into that 9 MA, reject and make new lows into that 580 zone, or maybe create a higher low and then reverse? We are into that 4-hour 9 MA area. So this is area where we can see buyers step in. And let's see if we can do that. SPY is backtesting Tuesday's high. So maybe we do see some sort of bullish reaction there. Similar with Qs, backtesting that gap up high from Tuesday. So maybe some interaction here. But so far, really nothing telling me at the moment. Well, you know what? We do have a divergence here. Actually, we have an SMT. I think equal lows for ES, and NQ made a new low here. So that's the first sign, right? First sort of requirement that you're looking at to say, okay, at these lows, there's a divergence. Oh, no, not anymore. ES just made a new low. Okay, so I can continue to wait. ES fairly weak now. Let's see how tech is doing. NVIDIA selling off. Amazon had a gap up. Oh, and Amazon sold back down. Yeah, it looks like, let's see, Meta powerful gap up. Just pretty crazy. Microsoft selling back down. Semis are down a bit. All right, so we continue lower for ES. NQ's holding at the moment. Really not much for me to do here as I continue to wait for price to come down into a support area. You know, what I need to see in order to short and to have a sustainable short, I need to see some acceptance, some wedge, right? Where we confirm that we're failing to reclaim a zone, and then a breakdown happens. We're not getting any of that right now. So as you guys know, there's really no setup here for me. I need to be a little bit more patient and wait. Yeah, what a move in Carvana. So let's see how we react on a potential bounce into the 90 May. If not, NQ can continue lower into that 580 area. Yes, super weak. So let's just wait for structure now. And let's see what happens. We do have a new low versus, I mean, we saw, you know, this is a significant lower low here. NQ has not made a new lower low. It's actually a higher low at the moment. Yeah, Faina, I agree, should hold here. If not, then we're maybe seeing a big failed breakdown. Oh gosh, is Tesla breaking out? No, Tesla's still hanging inside day. Tesla looks pretty good on the weekly. Really no bounce attempt at the moment. We're still consolidating at these sort of lows. ES won't stop. Let's see what banks are doing. A bit weak. Industrials, red. Utilities, green. Healthcare, green. So it's a little bit of a mixed market. I think if NQ drops here, then we can see that next continuation into 580s. So let me show that 4-hour again. So I look at these throughout the day. So we failed 60-40s. We're now into the yellow 9MA moving average. If that fails, we do have that next area of support here at 64-18 20s area, which is really the back test of this breakout. And look, this is really where the bulls need to step in, right? Bullish above, bearish below. So for NQ, super weak. I think we're probably it's going to want to test this this area here, 550s, 580s. And that would be the actual bull bear zone, right? Bullish above, bearish below. We are seeing a pretty aggressive selling into that area, but we still can't call it a seller's tape or a bear's tape until significant support breaks. Okay, SPY into prior day high, Q's a little bit higher. Let's see, do we have our side divergence? We do. So we have a new low in price, our side no new low. Same for ES, our side higher low. We are still, I would have loved to got this 580s area, but maybe we do set up an opportunity here for a reversal. We are into that 4-hour 9 MA. The hourly is into the 50 EMA. We're pretty, I mean, I kind of like the spot. It's a little bit below that prior day high in NQ. If we can come down to 5As, I think that would be like the best sort of area to look for a reversal. Let's see what this looks like. I'll be looking for a reversal here. But look, this can totally fail. And then we sort of bounce back up, back test, and then create a wedge, right? Which is what we're looking for, and then break lower. But we do have our side divergence. We do have on both. Okay, there we go. We're going a little bit lower. Let's see if we can get to that 580s. I would love to buy that. Weak. You guys making money on the shorts? If you are, fantastic. Let's get those likes up, guys. In the meantime, I'm sorry I couldn't start the open with a banging trade like usual, but there's just no structure, right? We need to be patient here. We're waiting. This is a hunting sport. If you guys are short, hey, you're making money, pay yourselves, finance your risk, and then see what else we get. I don't know why that played. All right, we have some consolidation here taking place. Look, into that new low, we still have our side divergence. So, but again, there's really no setup at the moment for the reversal. Maybe we start forming that now. SPY tested prior day high, NQ not yet. Okay, we're attempting to bounce it to the 9 MA here. I would love a little bit lower. But let's see if we can set something up here. I'm looking for that 2-minute 9 MA reversal for those who are a little bit more into that. And like, this may be the first reversal that fails, right? But after how many weeks, right? So I have weeks worth of winning trades. And then if this reversal fails, I'll take that trade anytime, right? If you're telling me that I can take 20 trades and then lose on 2 or 3 or 4, even 5, right? All right, so we have that 2-minute 9 MA lower high. Let's see how we react. This would be an aggressive buy because on the 5-minute, we don't have a 9 MA lower high yet. So what could happen is we bounce into that 5-minute 9 MA, reject. You know, Faina watches a lot of fair value. We have a lot of bearish fair value gaps. All right, let's see if I can get, we're bouncing a little bit above the 9 MA. Ideally, this is the 2-minute. ES is a little bit stronger on that bounce. Maybe this was the 2-minute. This is the area to bounce, and we're bouncing. We're holding the 9 MA. I'm considering a buy here. ES is much, much stronger. Let's see if we can. All right, I am going to try a reversal here. Let's see if we can get that 9 MA reversal back up. ES is definitely stronger. ES is back testing that 64.43. I would say this trade here is a little bit on the aggressive side only because this is the first sort of sign of character change in the markets into our usual support buy. But I do want to try it. If it fails, I'll be looking for a new support, maybe into new lows into that 580 area. What moving average is that of the cloud? It's a 20 and 50 EMA. Why is that playing? Okay. All right. NQ's not really moving at the moment. Let's wait and see if we can get a little bit of that bounce. We are into that 4-hour 9 MA, which that's ideally the higher low structure that we want to be buying. We are SPY did test prior day high. NQ did test Tuesday's high. Sorry, Qs, not NQ, Qs, okay. The 9 MA lower low, lower high completed. We have our 9 MA reversal. Can we get that push into these highs, right? I'll look to take some off, maybe like at 1.1R, 1.2R, if we do get that, just because I don't know if we'll get a large bounce or not. Maybe we do, we'll see. Yes, strong bounce, negotiating with this 64.43 area. If we can reclaim it, then NQ can push back up a little bit more. Let's see if I can get taken out here for half. Yes, attempting to reclaim that 40s area now. Let's get a little bit higher, take me out, and then we can finance our risk and then see what happens. Take us higher. Look at that bounce in ES, powerful. We need a little bit more from NQ. Give us that. There we go. Take me out. Take me out. I'm going to move it down. Oh, we just tested prior day high. Oh, that's going to act as resistance. If we can push back up, I'll look to get out there a little bit under 1R. If not, oh well, right? It's just have to stick to the rules as best as possible and not change as much. Oh, maybe we do get up higher. Let's see how rest of the market is doing. So we do have our 4-hour higher low here that I talked about. And something I shared was if, let me bring this here, that ES could see a big failed breakdown below that 6440s. And it looks like we are getting that. I mean, so I have a lot of noise here now, but look at this move here. Move lower and bounce back up. So maybe a failed breakdown there. NQ struggling a little bit. It needs to reclaim this prior day high in order for us to get that bounce back up into 740s. Oh, can it take me out? Beautiful. All right, so I'm out half at 1R. I financed my risk. I can now sit in this trade and let it do whatever it wants. Where do I want to look for more? Maybe 2.2R if we can get back into this zone. All right, fantastic, right, guys? We in the trade plan, I shared what I wanted to do, what my trades were. I showed up and executed. I looked for my requirements. Do we have divergences? I noted the RSI divergence. I noted where we were backing, back testing to. I noticed that the possible failed breakdown of 6440s in ES, in NQ, that we could see a move into prior day high or the 580s. You can see that we went a little bit above the 580s. We didn't exactly touch it. I did want to see a move lower back into that, but it happens. We don't necessarily have to hit it. Some of the requirements were met. We did have RSI divergence into that new low. And so you can see that from a trend perspective as well. We had the lower low, lower high, second lower low. Into that second lower low, we had a divergence. For ES, that breakdown looked like, I don't want to call this the lower low, lower high because it doesn't reach the 9 MA. So this is the lower low, lower high, second lower low, reversal back up. So now that our trade is paid for, I can let the market do whatever it wants. However, we did break down through a strong support at 740s in NQ. So that will be sort of a challenge to reclaim it, right? We need to see how price interacts up here at 2R 740s. ES did a fantastic job at reclaiming that 640s. Now what you can look for in ES is say, okay, if we can back test it and hold it, then we can push back up to new highs, right? If we fail to hold 640s, then we go back down to test the lows, right? It's really that simple. That's how you should be looking at and framing the sort of the path of what price can do. Now, the other path is that it doesn't pull back and it just continues higher. And then maybe up here it rests, right? But over time, as you sort of watch price structure and these candle formations, you start to understand the different variations of uptrends, how they look, how they rest, how does a strong momentum reversal look like, how does a weak one look like, right? And then through that, you can categorize them and say, okay, this is how a strong reversal looks like into a big support area, right? So you start categorizing these different reversals, and over time, in real time, you analyze structure and say, no, 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 this is what's happening. This is that A+ opportunity. But it's only because you did the work in categorizing these different types of reversals, and you over time execute, and the confidence and the conviction goes up, which allows you to get better at this, right? And then you see how I'm not talking about money or points. It's about process. It's about the location, and then your trade entry rules. Okay, you have to combine those. Identify an A+ location. Identify your A+ setup. What are the rules that over time give you a positive expectancy? Okay, it's all a process, and I go through this, week by week, and hopefully it gives you guys the incentive to get better at putting in the work, right, and allocating time into these into process creation. It's not about the money. It's not about how fast you can pass up one of those challenge accounts. It's not about that, right? When you're, let's say, $300 away from passing a challenge account, and your emotions are high, and you're just trading those emotions, you lose that account, right? Why? Because you stop focusing on the process. The way you should treat a challenge account is, if it costs you $50, $100, use that as a way to finance a $2,000 or $2,500, right, the drawdown limit that they give you. So in reality, you get $2,500 worth of experimenting and experiencing with only a $50 risk or a $100 risk. Do that over months, and let's say you risk $3,000. How many challenge accounts were you able to buy? And how many experiences or opportunities you got to understand price structure and to develop your approach? Hundreds of times, right? But if you just risk your $2,000 and you lose it all, you didn't give yourself the opportunity to learn how to execute better, to learn how to analyze better, to learn how to review your trade plan better, to learn how to say, hey, if I move my stop to this level, this is actually where my entry will be protected the most, right? So hopefully that little lesson helps. But let's get those likes up in the meantime, guys. We're at 265. We have 750 amazing souls in here, learning, watching, trading with me. We need to get those likes up. Remember, look, if you guys remember from last week, the higher the like count goes, the higher price goes. Okay, that's the true algo. So let's focus on that. But as of now, there's nothing much else to do. Oh. Price came down into our areas. Can we now bounce into resistance, which would mean NQ bounces into 730, 740s area? If not, so look, these are the possible scenarios. Can we create some sort of wedge here? If so, we can target higher, right, on a breakout higher. If not, then we're going to move lower to new lows, and I'll probably get stopped out. And, maybe there's another bullish opportunity down here. If so, that happens, cool. I'll gladly take that stop, and I'll look for a new reversal opportunity into that next area of support. As of now, there's really not much for me to do other than to just watch what price wants to do and see what we get. Let's see. So we're just giving price the opportunity here to create a wedge because the 90-day downtrend has ended. And if you guys remember my lessons on that, my teachings, we bounce into that 2050 EMA cloud, which we did. We now form a swing high, and we're now seeking a potential higher low. Potential because we don't know if it'll lead to a new low, or we do create a higher low and then create our wedge, right? So let's see what happens. On this potential pullback, ES can backtest the 60/40s. If we can wedge up and hold, then we can set up for higher for that 64-68 zone. If we fail to hold 64/40s again, then we can revisit the lows, right? It should be that simple. Let's go over some questions here. Neil says, thanks, Chris. Went long SPX calls. Fantastic. Pay yourself, please. Right? We don't know if this can actually turn into a breakdown. All right, Emilio, take care. Thanks, Aaron. Yes, France. Is that a custom indicator you have there regarding the 1R, 2R, and so on? Is it calculated based on your entries? Yes and yes. But you can access this if you reach out to NinjaTrader. This is called the risk reward tool. It allows, these are standard deviations, one standard deviations away from my entry. I like to take first partials between 1 and 1.5R. That way, if it's 1R, I finance my risk and I have, I don't want to say no risk because something can happen where I don't get filled on this, on the other half. But essentially, when I take half off at 1R, I pay for my trade. Now I don't have to worry about things, right? I can go on with my morning. I don't have to be anxiously looking at price. Is it going to go higher? Is it going to pull back and stop me out? Hey, I paid for my trade, right? So, quick note, what I had to do over time is increase my size. Obviously, this size is a specific percentage that I'm risking of the account value, but I've had to increase my size. So when I take half off at 1R and pay for my trade, the other half used to be my original size, right? So that other half is doing that trade, is seeing that follow through for me, and I don't have to really risk more, right? Which means that I have to have my entries and where I choose to find the reversals have to be higher quality in order to help that I'm now increasing my size, right? So for my swing account, I'm trading much larger. I'm usually trading 3 to 5 minis, and I'm risking, thousands of dollars on each trade. And so it's all about location that helps me mentally have that higher size and sit on the other half. Right now, 1.5R. If we are in a more bullish tape, I'll look for 1.5R. I did 1R because I'm not sure if this was a sort of bounce to back test and then lower, create a new low, and then reversal, right? I was unsure of that because we did see a little bit of aggressive selling. So, by the way, guys, for those in the group, right now we're forming an aggressive 50 EMA wedge. So if we can break out of here, we can challenge the 740s. And then at 1.5R, if you take off half there, well, half, you've not only paid for your risk, but if the other half gets stopped out, you still have a net positive of 0.5R. Eventually, that creates cushion for your next loss, right? All right, questions. Can you explain the tool you used for your risk management and exit? I just did that. Hopefully that helps. I don't have a YouTube channel, Andre, so you can find me on Twitter. Oh, you know what? Let me do that now. I didn't put that here. X.com. All right, so I'm gonna put that there. There's my Twitter. You guys can reach out there, send me a message. I don't have a YouTube channel. Neil, great trade. John, awesome. Thanks, Juan. Is it okay to call it a day and leave the screen if we have made our target? Sure, Raza, sure. My only comment on that would be, if you are trading in an environment that you know very well and price is doing what you like, if you're a bullish trader, right, it's more constantly than selling, and we're seeing just breakout higher and higher, you have to execute, right? You have to continue to execute. If you call it a day every time where you're in an environment where you know you do really well just because you hit your profit target, you're limiting yourself on those much, I don't want to say easier, but on those much on those less stressful profits, right? If you can stay there and execute more in those days where you thrive really well, like for me, it's uptrends after a 2 to 3 week consolidation. We break out those first 2, 3, 4 days where we're sort of just going higher. I'm executing a lot right there, right? And I'm executing with higher size because I know that is my window to make the most amount of money. And I do that, and I'll do trades on the day trade and on the swing account. I'll swing trade NQ while I day trade NQ. And I'll just show up and execute, right? So that's my only comment on that. Jacob says, first time in here, really like the insight. Do you do any other streams or videos throughout the week, or is it just Thursdays? Yeah, Jacob, I don't do any YouTube. I do have a private trading group where we all trade together. You can reach out and message me if interested. All right, so this wedge is not breaking higher. Yes, maybe it's going to fail the 6440 zone, right? So we wanted to see this and then a breakout higher. If we do not, then we're going to see this in ES and maybe test these lows, or maybe a higher low, right? Maybe something like this. Maybe it comes down, creates a higher low, reclaims it again, creates the wedge, and then higher. Okay, so let's draw that out now because that's maybe that. Or we do see lower, and then we move into that 6418 area, which is that next area of support. For NQ, a little bit of the same. Does this breakdown turn into a higher low, aka a failed breakdown from this 2-minute wedge? And then we move up into our next targets? Or do we actually have follow through, bounces, rejects, and then hits new lows? We'll find that out in a few minutes. Let me see if I can move this so we can see the price action a little better. 64.50. All right, hopefully that we can see that a little bit better. Yeah. All right, while we wait to see if that happens, let's take a look at the, let's see who's calling in, right, as they do it in the radio station. Good question here. When you started out with a smaller account, did you risk a larger percentage? Yes and no. I used to risk 3%, 3 to 5%, and it was percentage-wise a bit, higher. Yeah, no, Ninja shared a good comment. Guys, I'll be on tomorrow. We're gonna have a 3-way with Leo and Kane. So it's gonna be us 3 tomorrow, trade the open, and we're going to see who comes out on top. I'm just kidding. We're going to just have a good time, trade, see how our different approaches mesh together, and discuss, give some sort of education. Constantine says he's short. I hope you get paid, my friend. Have I gone over my swing strategy? No, because we are day trading futures here. All right, so this is that back test here that I shared in NQ. This is where we need to create a lower high and then reject back lower if we are to see new lows. If we do not, then we have a 2-minute failed breakdown of this wedge structure. And that means we can target the 740s area. Okay, so I'll keep those drawings up just so we can have some illustration here. Because look, it's not that I know what price is doing. We never know that. We can say, hey, trend structure per the market's movement is this, right? It's a higher high, higher low, or a lower low, lower high. And that is typically into the 9 or 10 MA, whatever you want to use. Cool. I use the 9 MA because of what my data tells me. So if we're breaking from a consolidation, we're starting a new 9 MA downtrend. So what you need to see per the market's trend sequence, right? I'm not creating this structure. I'm simply following it. We need to see a lower low, bounce to create a lower high, and then reject and move lower. If we fail to do that, we trigger a failed breakdown and price will traverse back all the way up. And let me show you guys a illustration here to show that a little bit better, because again, I talk about a lot about creating a strategy. I talk about a lot about creating a library of setups. Let me share that. Can I paste that here? No, I cannot. Let me share this. So this is what that setup looks like. Right now we're here, okay, in NQ. Let me move this here. Okay, here's NQ. I lost it. Right here. All right. We're attempting to break down. We're starting a new lower low, lower high structure. This is it right here. This is exactly where we're at, right? We created our wedge. We're attempting a new 9 MA downtrend. And can we reclaim and trigger a 9 MA reversal from this wedge breakdown attempt? If so, that can create a 9 MA reversal back up. So you see how I've categorized these setups, right? And I have different ones. Like I have libraries and I have videos of these. I have notes, right? So that's all shared. That's part of the education that's shared with the group, the trading group. But I share that because I have confidence in what I need to be looking for. And part of being a consistently profitable trader is that you, in your execution, you know what you're waiting for, right? You know what you're looking for. And for right now, I'm waiting to see, hey, does this lower low, lower high confirm? Do we break lower or do we reverse back up and get a failed breakdown? Let's go over some comments or questions. I have not read them in a bit. I'm just waiting to see what happens here now, right, guys? I have a little bit of a few drawings, but I think it makes sense here, and hopefully these illustrations help provide some clarity on price structure. Hey, Boriva, good. Hey, Jose, thank you. But yeah, guys, let's get those likes up, yeah? Just sharing a lot of great knowledge here. Hopefully you are all learning a bit. Chart Patterns asks, is there a way to learn your strategy? Yeah, I have a group called Paradigm Shift Trading. You can message me on Twitter and I can share some info. My Twitter is down here below. Henrik says, teaching how not to gamble. Yes, sir. Why don't I trade NQ? Because you're already trading MNQ with 12 contracts. I'm trading MNQ because this is a smaller account. And one, I'm a percentage-based risk trader. So I'm risking a certain percentage of my account. On my swing trading account, I do trade minis, and my normal size is 3 to 5 minis. Higher if my risk is less, right? Because if I'm risking, let's say 1% of the account, and instead of a 30-point risk, I have 15 points. Well, my contract size needs to be double, right? So my dollar risk remains the same. So, and this is just a smaller account that I have for Ninja to show you guys the execution, structure, right? It's not all about making the most amount of money in these sessions. It's about teaching you how to fish. So you can see that we bounced and created that lower high, unable to really reclaim that. So the next step could be that move into new lows. And if that happens, I'll get stopped out on the other half of my trade. And this trade will be a scratch, right? Which I'm okay with. Because I am looking, right? I'm an hourly trend trader. If I can participate in an hourly trend, then I can move up here, right? Yesterday, actually, with the group, we all took an end of day long after that FOMC statement, and we caught that big reversal into Meta and Microsoft earnings. Right, paid. So that's what I'm looking to capture over time. If on a specific day like today, it does not play out, hey, cool. Are you saying that I can just have a scratch trade? Fantastic, right? Think about what that does to my emotional and mental capital. I'm ready to go for the next trade because I financed my risk. We can get those likes up, guys. Let's get to 400. It's a good question. Oh, let me read some others first. Paul says, I picked up a couple of Tharp's books. Great stuff so far. Thanks for the recommendation. Absolutely. His books changed my trading around. Now, the question is from MW, if it's rejecting, why not scratch here? Because if I front run my stop over time, because I'm in a bullish reversal, you have to think of it like this. Your trade is invalidated when we make new lows, okay? If we don't do that, price can come down, create a higher low, and then reverse back up. Why? Because we're at support. I need support to fail for me to know that this reversal is now invalid. If I front run that and on a move down to what could be a higher low and I get out because I think we're breaking lower, that is a discretionary decision that is over the long run not going to benefit me. Why? Because we have no confirmation at the moment that support has broken, right? So I can't front run that. I can't think ahead of what the market is doing. We came down into support. I bought it. My trade is invalid when that support fails, not when I think we're going to break lower. Okay, the less we think, the better we do. Because when we think about what price can possibly do, then we are just either cutting our profits too early, or we are getting out of trades that are not doing anything wrong. Like technically, what has it done? Nothing wrong. So there's no reason for me to get out. And I have to be okay with the outcome if I get stopped out, because 8 out of 10 times into the same reversal opportunity, I will make money. And then 2 out of those 10 times I'll lose money. That's perfectly fine. So then how would the pattern analysis you just showed fit in? Well, on this breakdown attempt that I shared of this wedge, what we need to see is this drop lower, right? So confirmation would be this 9MA downtrend sequence into new lows. But if we don't have that, there's that possibility that we can attempt that breakdown and then create a higher low and then turn into a micro failed breakdown back up, which I shared in that drawing, right, with Notion. So I need to wait for that. Did I draw a fib on yesterday's low and today's London's high to see where you're trying long? No. Why? What fib is there? Let's see. Yesterday's low and this high. Is that the 50% pullback or? Oh, it is. It is the 50% pullback. Funny. No, I did not look at that. So it looks like we are attempting that break lower. What a gap up in Meta and Roblox, huh? Just incredible. Yeah, market's not doing anything here. There's really, it's just a waiting game. Oh, SEG with a beautiful breakout. Google's hanging out. Let's see, Hood. Beautiful bounce back up. IBIT consolidating Bitcoin. Software consolidating net. I have some net long. We just broke out higher. Beautiful. NVIDIA at all-time highs. Yeah, we're still on the aggressive. Sorry, not the aggressive. We're still doing well. All right, so it looks like I'm going to get stopped out here on the rest, which is fine. I'll get taken out, and then I will look to see if there's another bullish opportunity. Oh, although for the aggressive trader, I'm looking at cues here for those in the group. All right, so if you guys are watching from the group, if you look at SPY and cues, we did have a beautiful 9MA consolidation at the gap up. So that triggered that gap up sort of idea that I always had, right? You guys in the group know. So if you're in the aggressive type, you probably shorted that. I'm still in this long and I'm okay with it. I'm just waiting to see if we make a higher low or not. Let me remove this drawing. ES is doing much better here. It's still a little bit choppy, but look at the difference in this area here. Like this is a significant higher low here versus NQ, which is a little bit much lower, and it's close to a new low. So it's just a waiting game to see if we do make new lows or not. If you're short, fantastic, get paid. I just have to wait and see if this is a higher low and we reverse or we do commit to that breakdown. And great to see more of you guys in here. 750. That's great. Hope everybody's learning and earning. Today might not be an earning day for me, or maybe in the morning, right? Maybe it's a scratch and in this segment I don't make any, but maybe later in the day there's another opportunity and I can make some points. Yeah, hit that like. We're at 357. Let's get to 400. If we get the likes up, price will go higher. Remember that. So how do you protect your account when price is trading against you and not let the get full stop hit? Well, you protect your account with your position sizing. Your size needs to be low enough where you can have multiple trades, uh, your size needs to be small enough where you can have multiple opportunities to trade and have your trade, your sequence of trades become profitable, right? So that's your first step at protecting your account. It's your sizing, how much you're risking. If I'm choosing to risk 1%, you see how I'm risking very little. So that's the first step at protecting your account. The other answer would be when price is trading against you and not let the full stop hit. What do you mean by that? If you're in a trade, your trade is not invalidated unless the stop gets hit. Why would you want to get out before your stop gets hit if your trade is not invalidated yet? You get me? Like, you don't have any confirmation that it's invalidated. You think that you're gonna get stopped out, but that's not data. That's not actual data that you can rely on consistently. You need technical price data to tell you that. What is the function of using divergence as a filter on the 2-minute time frame when there's one on the higher time frame, 5-minute bearish? I don't see how there would be a bearish divergence on the 5-minute when we come down into support. Like the divergences are at highs, right? For bearish. If you're considering reversals. Hey, Bridget, good to see you. Cedric. Hey, listen, don't even talk about likes for the downside, okay? Don't, if you're short, make your money. But we don't got to get aggressive here and take down the likes, okay? Yeah, data measurement. Look, we're data analysts, right? Everything on the charts is data. That's our jobs. We can call ourselves traders, but in reality, we're data analysts. We're analyzing data. We're analyzing back historical data to then see what set of parameters create a positive expectancy. And then we're data analysts when we're analyzing the market in real time to seek to see when price forms or meets those requirements, those parameters, where we have historical information telling us that when this happens over time, we can make points. We can make more than what we lose, right? Yeah, Constantine, that's a good question. There's no plan behind the trade if you are getting out of a trade that you think might stop you out, might not. Yeah, don't be afraid of taking a loss. Look, you're risking a certain amount for a reason. Sandy says, I'm seeing it manipulate down. What does manipulate down mean? What do you mean by that? You mean a downtrend? How do you see that? How do you see price manipulate down? What does that mean? It looks like it went lower. But see, this is why we pay for our trade, right? Because I can take this stop, no problem. Like the reversal didn't work. Cool, no worries. I took half off at 1R and I paid for my trade. So if you're anxious or scared when price is so close to your stop, then you just don't have conviction in your system. You have to understand that stops are a requirement, right? Or sorry, losses are a requirement of your strategy. I need to take losses. I like this is a great trade for me, right? Even though it's a scratch trade, I did what I had to do. Why are you anxious? Mm-mm. What was I gonna look up? I was gonna look up a stock. I can't remember the name. Yes, Elijah. Great point. There's too much dollar figures being shared on Twitter and on YouTube and Instagram, all these things, right? There's just too much focus on dollars. That's ruining you guys. You have to focus on percentage based or process, right? Sequence of trades. Author and books. So Dr. Van Darp. He's a great systematic trader and mentor, coach. He's what helped me systematize my trading and what I really turned things around for me back in the day. Yes, Elijah, he makes good points. Hey, thanks, Polo. What a comment. Thank you so much. All right, so stop that on the rest. Can move on and wait for the next opportunity. We have 5-minute divergences now. We're still into that. We're coming into that 580 zone. So I have a fresh start. I've lost no money today. So I have my mental bank account, my emotional bank account is full. It's maxed out, right? The confidence and conviction is there for the next trade. So let's see if we get another reversal opportunity here as we move into that next area of support. We do have 15-minute divergences in NQ now into this low. So that is something to note. Let's see what we can form here now. No 2-minute divergence into these lows. So let's keep an eye on that. Yeah, some of you guys are short. Fantastic. Get paid. Delta is pretty much flat for ES. NQ is lower. Wow, MP looks great, huh? All right, so we have a pretty big divergence between ES and NQ. ES higher low, NQ lower low, And then we do have a 15-minute divergence into this low, 5-minute. We have a 5-minute divergence as well. Let me try another reversal. If we can sort of reclaim this here. I mean, you know, you guys know I've been waiting for this 580s area. Hopefully we do get that. I would love that. Yes, both of those questions. I do use RSI and Delta together, but again, I'm looking for divergences. Okay. If we can set up RSI divergence or Delta divergence into new lows, that's a good indicator. I mean, technically we do have a divergence. Price has made a new low. RSI has not in this sort of move here, but with Delta, there is no divergence. You see how we do have a new low? I think next thing I want to add is maybe the DOM. I see those order flow guys use it a lot, and you know, I'm interested in watching a little bit more of that internal action. So we can trigger a 90-minute reversal here only because we have 15-minute divergences at these lows. We're still into that support area. We have not really confirmed that we've broken it. We certainly can break it and it can fail. If that happens, cool, no problem, you know, but I don't have a structure here. So typically what I need to see is I need to see wedge structure here and then a breakdown to short, right? If we don't get that, I can't short a breakdown. Can we just break right through and drop? Absolutely. But my requirements are not meant for me to manage risk on that trade idea, right? So I can't take it. I am nothing without my rules, right? I am not a good trader if I don't follow my rules. Let me show the hourly chart here. So ES is below that 64.40s. If we cannot reclaim that, we're going to go to 64.18. NQ is so close to backtesting this 580 area. This is ideally where that reversal I want to be looking for. That's a really, really good spot. Below that, we have the weekly open and sort of 510s, 520 area. But this 580s area that we're coming into, that is the main area that I'm looking for a reversal, which is why I'm considering another long here. How do you know the divergence isn't due to time of day slowing down? I don't know what you mean by that. The divergence will be if whether we're seeing low volume or not, you're still getting a divergence, right? Because if our side does not make a new low, when price makes a new low, that's a divergence. It doesn't matter the speed of it or the time of it. What, you know, we're comparing price, not time or the volume. All right, let's see if we can create a new internal lower high here. Fairly weak though, so I do not, Elijah, but thanks for sharing this 580s. Yeah, these zones are great. They help me identify similar things as you, but you're saying that the single print, the buyers from yesterday's earning created an aggressive single print zone here at 580s. Fantastic. This is a good area of support here. At least we're stepping into it, right? But maybe this is the top. Who knows? On the weekly, it sure looks like it. All right, the structure is sort of ending here, so I need to wait for a new reversal here. Hey, Wojak, thanks so much. All right, so we're entering that zone support that I've been looking at. We sort of had this drip lower. Remember, into a strong area, the only way I can take a short is that we create a wedge where we form acceptance, right? We're accepting the zone. Any bounce attempt is being sold. Sellers are moving lower from here to here, right? That's what acceptance means. It's sellers are not allowing buyers to drive price much higher, right? So we create a wedge. That's what acceptance is. The technical structure is a wedge because there's no trend. There's no lower low, lower highs. We're living inside a low and they swing high, and then the structure inside of it is a higher low, lower high, okay? So I need that in order for me to know how to manage risk on a break out or breakdown, because this contraction break is a directional setup versus my reversal setup. So I just have to wait and see. We're sort of getting this slow drip lower, right? There's really no structure here for me to execute on. Yes, MW. Yeah, a 2-minute 50 EMA wedge is actually a 5-minute 9 EMA box or consolidation. Let's see if we trigger that reversal now. We can trigger above this. I'm interested in it. See if something happens. If not, we're just going to continue dripping a little bit lower. But so far, nothing. All right, we're in here. We're in here. NQ into that zone. 580s. ES is really not, it's still a higher low versus that morning low. So I'm watching to see if we get a reversal here. Okay, so I am filled. Let's see if we do trigger a reversal here. Oh, I may have front ran that 9MA lower high here. Looks like that candle was what was put in. So I'll have a loss here if we do make a new low. Okay, so that technical lower high was here. So now I just have to continue to wait. But I mean, on the daily, it looks like we are seeing a pretty maybe, I don't know, I don't want to call it a top, but all these reversals up here have looked like that. But I mean, you guys who are short are making those points. Fantastic job. So look, this at the end of the day, this ended up being a good example of how the past, I don't know, 5 weeks of streaming, I've been focused on bullish reversals, and today's the first day that these bullish reversals have not worked, right? So I think this is my first losing trade on the stream in 4 to 5 weeks. Oh no, I did take one last week, but the following trade was a green, so the day ended up being green. I look at both 2 minutes and 5 minutes. I like to execute on the 5 minute. I'm sorry, on the 2 minute. What a drip lower, huh? How many likes are we at? We're almost at 400. We can get a 400, guys. All right, so no structure here for me. I don't know if there's going to be a trade into the end of my segment. We're into that area of support though, so this is still that area where I consider a viable bounce opportunity until we form acceptance here. And hopefully, hopefully today's the top. August and September are pretty weak. So I think we are maybe we're starting to see we're starting to see that. Nvidia selling down, semi selling down. Meta still holding. First day in a while that shorts are getting paid. So great job if you are in that. Oh, we're so close to 400 here. Yeah, I agree with that, Mark. That it looks like it. It looks like a top, but all we would be doing is coming back down to that next area of support, right? Which we're into that here. 64.18 is a really good area here in ES. This is where we had a lot of resistance yesterday, and then at FOMC we had a failed breakout of it. We then reclaimed it, and now we're stepping back into that. Then below 580s, if we cannot hold this 580s, then we are going to see 510, which was that similar area in ES, a much a good resistance now turn support maybe. to get short at 40 in MES. Oh, that's a good short. Nice, Bridget. Great day for you.
Chris, good morning.
Stowe, what's up?
What's up, buddy? How are you?
Good, you?
Oh, good.
How
Just
was your
chilling.
vacay?
Oh, it was nice.
Yeah?
Super nice. Yeah, thank you for asking. Yeah, my daughter loved the ocean. She's never seen it, so she was
Oh,
excited.
wow.
Didn't want to leave. So, yeah, it was
So
crazy.
she had the ocean and the water park in 1 week, huh?
Oh yeah, she got to do so much stuff. It was crazy.
That's awesome. Good for you guys.
Yeah, it was great. How's
You try any longs today?
no.
Or you're on the short side for
I
once?
did not try any longs today. I'm very proud of myself. I did get a good short. I covered it at previous day high in NQ for the gap close. Now I'm just not doing anything. Like you were talking about, we're getting back into yesterday, so it's possible that we can bounce down here, but I'm gonna need to see a bunch of reversal stuff before I'm willing to get on board. I need a big context shift, and it looks like for now the passive selling is just following this down. So we're just getting back into that previous value area we were partying in. So not much for me to do anymore.
Yeah, we are. It's just a drip lower.
It's trying to, yeah. I mean, this is kind of like, whenever we have these insane, like big earnings candle, big everything, like yesterday was a total mess in a billion ways. So I don't know. I want to see some of these lows get taken, some of this earnings noise get auctioned, and then we'll see. Yeah, if I can get good like higher highs and a nice grind up from down here, like if we can put in a low actually,
Yeah.
that would be cool, and I'll get back on. But yeah, for now, target was previous day high, and I don't, and now we're below it, so not much for me to do.
Yeah. We'll see what happens. Maybe
Yeah.
today's the top. We don't know.
Yeah, I don't know.
Find out in a month.
Nobody knows. Everybody's been calling a top every day since I don't know, February. So yeah, they're gonna get it right one of these times, Chris. But in the meantime, we just have to try to figure out how to get some points out of this thing,
Yeah, that's the name of the game.
Yep.
All right, my friend. I'll let you take over. We'll probably look for some longs here soon with you.
Cool.
If something sets up, but for now, it's just dripping down. There's not much to do.
Yeah, we've got weekly VWAP at 535. That's a target. I'll look for a pause. The weekly open is at 520. That's all. That's been a magnet. So, yeah, I'm just gonna look for all those things. See what we can get.
Yeah, looks good. All right,
Cool.
I'll see you later. Chat. You guys take care.
All right, thank you, buddy.
Tomorrow, actually, with your boy Leo and Kane.
Oh, that's right. That's awesome.
And we'll see what we can capture there. Maybe all of us combined can make one winning trade.
I'm sure you guys will be awesome. I'll be tuning in because I'm excited to see that. So that'll be cool.
All right. You guys take care later. So.
All right, later, bud. Hey, good morning. Good morning, chat. Good morning. Good morning. Good morning. How we doing? Everybody doing good? Good morning. Good morning. We finally get some moves today. We get to zoom out. Finally squish up this chart a little bit. So we're at the weekly VWAP now. It is Thursday, so I like to see that thing. All right, there's a big single that just formed there. And we got our 11 o'clock turn. We'll see if this single is going to hold or if it's going to fill, if it holds, you know, we can, I don't know, we can probably plan to continue back lower into, you know, into all of yesterday's range. So, but we'll see. I'm going to watch this to see if this is a healthy reversal or not. I would have liked to see 520 tag. It's because, you know, I like my G line. But let's see, I'll turn up my volume a little bit here. There we go. That's better. My kid was playing with all my volume knobs yesterday, so I got to readjust. We were jamming hard in here. So no longs for me. Obviously, you guys know my rules by now, you know, and we are outside of the -2. That's extreme trend at the moment. We are below the previous day's high. So, you know, that gap filled. That was a frustrating morning waiting for it to fill and then getting, what did we get? Like, we got 20 points away from it right here. And then price ripped. So that was funny. The market's got jokes, you know? So right now I'm looking at this. We're just watching these lows to see if a seller is going to come in here for continuation. Let me look at ES2. Yeah, ES came down and hit 420 again, hit that previous week value area high. So, I mean, good spot for a bounce for both. But this is knife city. So we're going to chill. Good morning. Good morning. DZ asks, Stowe, can you see 0.5 of PD last day? What do you mean? What do you mean, bud? Explain that to me a little bit. Good morning, Savvy. Good morning. Good morning, Drunk Radish. Good morning, Driver Trade. Good morning, buddy. Good morning, Jesus. Good morning, Mike. Reasonable. Good morning to you also, Mark. Good morning. Very reasonable. Good morning, Lido. Good morning. Oh yeah, Chris rules, Driver. He's a great guy. I also really like Chris. Great trader. Very good trader, very good person. Not always a combination that exists. Whoa, there's some pop. Yo. Hey. So this is actually discouraging for me. I don't really like to see this. I mean, you guys know I like to play long. So I would like this to be productive grind cover up. We'll at least get back to that gap. I'll show you the trade that I took this morning that I'm stoked on. It wasn't pretty, but it was exactly the short continuation idea that I told you I've been looking for, trying to practice, trying to get better at. So we will show that in a second. I might get into this for continuation. We're just trying to see. It's getting quite wiggly. I'm trying to find where this actually bounced. 34. Yeah, I mean, this is all these highs. So from yesterday, this is like all of that business. So if we're going to get a bounce, this would be nice. It'd be nice. It's nice to bounce. Nice, Tracy. Let's go. Extension City. You know I love it. The man loves 90 days. You know? Got to give it to him. That's what we need at the lows, you know? Little tariff news, poke, poke, poke. Clean that baby up. Nice call, HK. I too like to look at those news tops and bottoms, depending, news spike on the FOMC in general. I stole that specific alpha from Brent Donnelly, who wrote a cool book called Alpha Trader, and it's in there. Let me try to find that exactly. 2 o'clock. Yeah, we're looking at I've got 560 for the news drop itself, and then we have 588 for that, the peak of the whole thing. So it's FOMC is harder to measure those news peaks and highs, peaks and lows for me, because it is like, if it's the press conference day, that kind of becomes its own whole afternoon event. So, but I mean, we're back in it now. It's not like they're not trying. But I mean, we're just coming back up to previous day high. This is a lot of passive selling here. So I wouldn't get too excited, is what I'm trying to say. Yep. As suspected. But remember, we want to see a healthy grind back up. If we're going to put it in an actual low, we don't want it to just spike out of nowhere like that. So when I said that this was a little discouraging to me, it was because it was, pretty squeezy. And this was too low for me to try for continuation too. So, I mean, yeah, I don't know. What am I going to do? What am I going to do with that, Oh, big boy. Somebody came down, slammed lifted some offer there. My word, Mr. 550. Okay. Let's see the response now off of that, if they want to keep pushing down. That was a lot of when an offer chases something down like that, that is always something worth noting. So again, no knives for Stowe today. Okay. We're stepping back in now. What's ES doing? New lows for ES. Okay. Interesting. Remember, ES is right at that inflection spot, 15, 64, 15, 64, 16, which was, a high that was pretty annoying. So we'll see what it wants to do here. It's moving quite quick, so looks nasty. Somebody's getting mad. Somebody's big mad right now. The seller is really pushing. Here we go. There's a stop run. Okay. Pushing more. Yep, pushing more. All right, here comes the weekly open at 520. I assume that's going to get tagged. There it is. Any buyers there? Nope. Fresh out. Previous day close coming up here too. Yeah, just a bloodbath, guys. Mr. Seller, so mad. Let's check out Mr. G Line, see if he's got anything good. Oh, okay. That's a fun candle. Again, same thing I said. What did I say this on Tuesday? I think Tuesday was a down day too. Like squeezy relief pops gonna happen off of, big trendy down days. And I don't chase those in the same way that I don't chase continuation down here. It's just not within my strategy. Doesn't work for me historically. The proof is there in the statistics, in the Stowe stat encyclopedia. Rejected weekly VWAP from below now. 535. Maybe we should pull that up. All right, let's see. Don't mind my gross colors for now. All right, so we are back in this balance area. We kicked off the top of it for a second. So that's the top of the weekly band, 621. Weekly VWAP itself right here at 535. And then the lower band here right at, nice. Okay. So 463, maybe this should be ultimate target for today. If we're going to trend down the whole day, that could be good. Yeah, G-line buyers smoked. Smoked. This is heavy. Let's see if this seller is going to press on this G line here. Keep it lower. It's so heavy. I might scalp this. Let me see. We'll get to 500. Probably. Yep. Here's 500. Okay. More relief trying here. Previous day closes here. Previous week highs here, 475. We're kind of getting back into MGI world a little bit now. But yeah, no sign. No sign of seller letting up in any sort of meaningful way. So, well, I guess I shouldn't say that. There's no sign of a buyer stepping in a meaningful way. It's just been like quick blips. You know, like even this guy, not great. That's not productive at all. Wow. This is kind of the 5-day point of control here too. What time is it? 11:15. I feel like I've traded the heck out of this 495 spot. Okay, previous day close just tagged 485. Just trying to see these, like, I mean, these are important spots, so it's just good MGI to look at. And this is passive selling here or buying that's going to get through them. We'll see. I've seen weirder places to bounce than the previous day close. Often too, you know, you got that big gap up. There's a lot of people left hanging there at the previous day close. So thanks, man. Not a lot of love here for the buyers. Yep, nothing for me. Yeah, right? I mean, and Q loves going to 420 as a rule. You just got to get through this this passive guy. Blue team following this down. All right. We'll see. I still can't buy this thing. I mean, look at this. It's so gross. And here comes a big aggressive push again. Let's see what he has got to. I haven't seen all right, retesting blue team here. I haven't seen a day this heavy in a long time where the -2 is rejecting, you know. I think it's been many weeks since the trend down has been this intense. Okay. Retested that buyer, and then they seem to still be stepping in. So we might be able to build some, reversal structure off of this spot. But at the same time, we're also back into all of that value from yesterday. So when I think about, what would my target be? Let's see if we reject the G line from below or not. If we're just going to cruise past through it. Okay. Okay. So now we need above this high for me to start to consider that perhaps this is reversing. Check ES now again. ES got to 402.25. There wasn't like a billion lots or anything sitting at 400 either. Okay. Yeah, that was kind of that was yesterday's spot on ES that was the bounce before FOMC minutes. That was the low. It's good. You want to see these pullbacks. You want to see it. And then you want to see buyers continue to support buying higher. Yeah, Jeff. I mean, anything could happen. No way to know, bud. That was the pre-FOMC low. Thank you, Jeff. Yep, for sure. 2 Jeffs. Different spellings. I wonder if Jeffs have the same feeling about Jeffs that spell their names differently as Chris's do. Because there's Chris with a K and then there's Chris with a C. I know our Chris with boxes is Chris with a C. I think that would be tough to be a psychic, Jeff. I don't think that would be very fun. Would you want to know what happens every time, like before anything happens? That seems like a freaking nightmare to me. Who trained the pool? Good question, man. Crypto John says, dang, it sliced right through it like it wasn't even there. That is important. When something is a piece of MGI like that and it gets sliced through like it's not even there, oftentimes the reverse, the test from below, that will be the part that is meaningful. This is still like a little extended for me to try to mess with this. I don't know. I just don't want to short 520. I don't want to be short all the way down here. Not that it can't be good, but yeah, it's just not my playbook. Sheesh. Stuffed. I'm testing that spot again where those buyers got through. I don't want to come back down to earth. Yeah, so no higher high on this leg here. So we're just like it's just steps down. No way to know where it's going to stop. We've got 268 points in, so I mean no point in catching a knife. And I need to see at least, I don't know, maybe that was a good spot. But this is kind of like, this is what I would target with a short anyways, is right here. So it's very hard for me to initiate looking for lower, because that would be an outlier scenario. All right, 11:25. Got 5 minutes left. It would be pretty hilarious to just auction down here where we spent the majority of yesterday. That would suck. No one would like that outcome. Some big lifts, some big offer lifts right here in the 500s. Somebody just dropping on 200 lots. I think this is what makes earnings kind of even more difficult to play than news. Is there's like, I mean, especially for me, because I don't know. I don't know anything about companies. Like, I don't know what Microsoft is up to. You know what I mean? So, like, there's lots of different things in play today that don't have anything to do with me looking at order flow. So, I mean, it's the second time we've touched this G line. So either I'm going to take this and we're going to continue to trend lower, or I'll get stopped out above this high, which is fine. So that's a decent entry there. I don't like doing this right as London is closing. Yeah, pretty aggressive, but there's still a seller here stepping in at the G line. We spent all week below it, so if they're going to defend it, they're going to defend it. Oh, yikes! Somebody throwing 100 lots on the bid. Never good. Yeah, here comes the yeet. Maybe. That's all right. All right. Took a stop. Can't win them all. Got to get above this weekly view up here at 535. I mean, we got lots to do before I can consider longs. Yeah, slope is still pretty crazy. Yeah. Oh, yep. Weekly open is the G line. Yes. All right. So now we're watching this. There's a buyer now. Okay. All right. Okay. Trying to see if this is maybe working itself out up here. Okay, there's the turn. 11:30. Let's see what we get. Nope. Pulled it. Okay. Almost got short again. Not today, Satan. Not today. Yeah, Cooper, maybe. I mean, they might be buyers. It's tough to say. Like, this is not. There's definitely a buyer down here for sure. Passive seller tried for continuation down here, and then got ran through, retested, and now we're going higher. This is not the world's most awesome low, so I don't consider this like the low for the day. I'm not seeing insano action, but this is at least looking moderately productive. But I still can't. I still don't want to buy it down here, like at all. It's just better for me to be safe like that. Like, if I don't catch knives, it saves me so much money, stress, time, all those things. So I really work on not making stupid decisions like that. And so this is like when I'm talking into the microphone about it, that's also what I'm saying to myself so that I don't do it. It's hey, we got a rotate. Okay. So we got a new 60-point rotation. The delta volume profile just reset. So now we can see this current leg here. And see what we're looking at. Rogue shots. It's not a poor low, like necessarily. I mean, there's a little excess at the bottom, like down here, like 90 to 82. This little taper here, and this little, you can see it on the volume profile, and you can see it on the delta volume profile too. You just see like lack of interest down here, interest here, and we're moving above it. And this interest was retested, so it's not the world's worst low. Oh wow, they're really partying now. Let's see if I can get a seller to step in here. I will try for continuation off the +1. He's trying. I saw a push. But I will hop out of this ASAP if he gets popped. They're chasing it a little bit now. I don't really have any delta backing me up here either. Mm-hmm. Nope. Cool. Quick one there. D3, 60, yeah. There it is. Classic. Let's see what this is touching here. Yeah. All right. I need to be on the right side of the V. There was a lot of selling that was immediately rewarded right here in the 50s. Seller stacked back up on the offer. Let's see, though. Yeah, I'm just not going to do it. I don't want to. I just don't want to. I just don't want to take this trade. Doesn't mean it's not going to work, but I just don't want to take it. It's not a trade that makes me feel good. It's not a trade that I have a good target for. Yeah, I'm just not going to do it. Wait, what did it take you 10 years to learn, Michael? Tell me. Sorry, I wasn't paying attention. It's fine, Cooper. No big deal. I mean, I could have kept my full stop there and it would have been fine. I could also get in it now. I just really don't want to. I just don't want to. I have tried this short continuation trade like 9,000 times in this market this year, and it's not my friend. And it's okay. Not everybody's going to be your friend. So this is also looking relatively constructive. That selling right here got eaten back up on the way up. So now this is gone. This bid came in and supported here at 540. So it's just like, it's fine. It's fine. It's fine. Let it be, you know? Hey, Neil, what's up? Friends, why didn't I buy the higher low? Well, lots of reasons. I'm inside of this -1 band. Like, this is a pretty extreme trend down. Look at this thing. And yeah, I just like when this thing is sloping like this, puking its guts out. We have a single print up here that is confirmed now. I just don't buy down here. It's just part of my rules. It's not a rewarding situation for me. Doesn't mean that you can't do it if you don't want to. Lots of people buy down here. Lots of people like to catch these reversal spots, but I need more constructive upside in order to be able to get to it. And like, I don't know, man. Look at this day. Look at the whole thing for you. Here you go. Actually, yeah, let's do that anyway. Okay, let's go back. Europe Open overnight. It didn't do too much, you know. It's whatever. Coming into the now this my friends is an opening drive down for the scrapbook. Look at that baby. Holy Moses. Not a tick above the open basically. And let's see, 747 to sit basically 100-point opening drive down. So I just watched this and laughed. I can't get into this in any point. It's pretty hilarious when the 5-minute opening range is 100 points. So you kind of know that you're going to have a big day. Something's going to happen. So, it started to make these lows down here in the 660s, which was, the spike top here from that after hours push that earnings gave, whatever that was. But yeah, I just waited because an opening drive down with a giant gap like that, and the gap was sitting at 590. Statistically, that gap's going to fill with this big opening drive push towards it. If we were to opening drive away from it, then I'd be more willing to try buys down here because there was buyer initiation off the open, but there was literally none. It was just seller city. I've been saying city too much, by the way. Somebody help me take that out of my vernacular. Anyways, so I just waited because as we talked about, my rule is if I'm going to try for a short continuation, I need to have two things, a target, and then I also need to initiate that position at the +1 standard deviation band because this is where the retrace happens. And here, we'll go into the trade. So, was it pretty? No, it was gross. I got it here, tried to get on the right side of the V, added, stopped out. You can't see it because the candle's also bright blue. It stopped out right here on these shorts, stopped out, and then we hit the 5-minute mid, which I should have just waited for. Hit that, then I immediately got back into the trade, added again, and then I was able to take one off here, another off here, another off here, and ultimately, and another one here. I had quite a few on. So this was the last one. Yeah, so this is where I got flat. And then we came down, almost got to the gap, pulled back, and I entered short here for short continuation with my stop above this high, got out for 10 points, and then ultimately we filled the gap here at 590. So that was the trade for the day. And I feel good that I got it. Even with taking, and like for me to be profitable on a short, that's pretty cool for me. So good process win today. Waiting for this was good. I didn't touch this with a 10-foot pole. Very proud of that. I'm getting much better at being patient. So that's all good. All good in the hood for me. All right, now let's see what this thing's up to now. Thanks, Lito. I appreciate you backing me up there. I don't have to. I didn't want to. Yes, Chris, I do. I benefit from you winning. Deep down inside, it helps my heart, helps my soul, and I love it. I love it when you folks win, because everybody in the chat is my bud, and you're all very nice to me, and I do appreciate that. I love to see you guys win. I love to see my friends win. It's the best. That's the best part of this game. I love to see everybody win, and I don't care how anybody trades, what they're up to. Watching people win is fun for me. If you can find joy in other people's success, you can live a very happy life. You'll never be bummed, because someone is always winning. The Sto. Thanks, Mr. Deck. Thank you, buddy. I'm proud. I'm happy with that. It's good. Hi, David. Yeah, I use a 5-minute opening range, which is something I stole from Leo. And there is a very specific trade that exists on days like today. So the way that it works is you have to leave the 5-minute range. So, I mean, today is huge, but let me just explain why this setup was qualified today, because Leo gets a lot of questions about it, and the poor guy's had to explain his alpha a billion times. So let me help. Let me step in and help. It leaves the 5-minute opening range, which it did down here in this area, and it has to build some volume. It has to do some business down there, right? So if you look at the volume profile, outside of the 5-minute opening range, it built this. Now this wasn't as big back here because it got a benefit from this build here, but it spent some time and built some volume down here, and then it retraced back to the 5-minute OR mid, and that was the point where continuation to the side that it made excess volume in happened. Now this is a pretty cherry-picked example. And reminder, don't let people show you hindsight stuff and tell you that it's awesome, because it's whatever. So grain of salt on the hindsight here, but this is a good example of a lot of confluence things happening here. Now I like short continuations trades off this +1, and the fact that they were almost in the same place, that's cool. We also had, I can't show you because my delta volume profile is reset, but we also had a bunch of passive selling here that was existing and eating up this buying that eventually caused the reversal. So many points of confluence. That's why it's important that you got to hold a bunch of different ideas in your head at the same time in order to trade. So that's part of this too. And so in this moment, I'm holding like 4 ideas at once, right? First idea is we have an opening drive down towards a gap fill that is huge. It's 100 points. So statistically, that makes it more likely that that trade is that gap is going to fill. Second idea I have in my mind is my short continuation trades mostly suck 1,000 butts if they're not at the +1 standard deviation band. And I should just wait for that. Third idea, the opening mid trade has qualified and exists. So yeah, those are all those different things I had in my mind at the time. So that's all the stuff that I'm, hawking, waiting for, working my way up to that trade, that sort of thing. HK says Stowe maybe W +1 RTH VWAP and IB low is more optimal short location. Yeah, maybe. I mean, that would be. I mean, there's definitely a bunch of selling up here. We've already kind of rejected this IB low once. I'm curious why we can't get over this guy, honestly. And look at this. I mean, we're right up against this ledge here. I'd like to see this get popped because this is a very. I mean, look at how silly this is. Look at this perfect high, 584.50, and the perfect low here. So this is a spot that is trying to figure itself out. Buyers currently throwing their entire bodies at it, trying to break it. This is also previous day high here at 590. And this is odd that like previous day high hasn't been revisited. It's just been gooned in front of basically. And still to the tick there. Yeah, I would be. I don't know. This is a lot of selling here. So if this is a passive bid that's following this up, then we're gonna keep going higher. I'm not gonna initiate a long here either. I'd like to see us come down. Maybe check out 550. Check out this little ledge here, this high, and then head up. And if we're gonna keep walking our way up, I want to see, healthy pullbacks along the way, like I've mentioned. Oh, you're welcome, Wild Bill Hiccup. I try to be clear and detailed. It's hard. It's hard to explain what any of this stuff is. Like yeah. If I was to sit down and try to explain what it is I'm up to, it's a challenge. But that's part of the fun, probably. I like a challenge. The one thing that's kind of missing from this high is there's no passive seller up here. So like there's no blue team yet. Like that's pretty light, And the whole leg too. After we got through this guy, we got into a little red team, blue team war here. Blue team lost and was retested. And then it's just kind of been red team the whole way. So, yes, I don't know. ES is actually being a little more productive now, but it's kind of in a similar spot. They're certainly aligned today. Wow, look at that. If that's where it stops, that's hilarious. That would be so funny. Look at how perfect that is. That's goofy. This was a big guy just there. Coming in and lift. The old Gandalf tick. It feels like that. It feels like Gandalf's up there partying. Now, the anchored VWAP from this leg that we're in is also right here at the +1. So we'll see. We'll see what happens if we get down to it. It's 11:50. So we got 10 minutes until another turn happens. At the moment, it's being productive and doing productive things. But you don't know. And again, like, you got to take the context of the whole day and then realize that we're watching microstructure right now. We're watching a leg inside of, a day type. And we're still below IB low. We're still below VWAP. We're still below 24-hour VWAP. I mean, did we even touch it? No. Look at that. We have not yet touched the 24-hour VWAP today inside of RTH. Not even close. Not even close. 77. 25 points. That's funny. Yeah, so we haven't reverted to any sort of the 24-hour mean. I love it. The market's so cool, man. I don't know how you can watch this stuff and not get stoked.
Stowe.
Hey, Jim. Good morning, my friend. How are you?
Pretty good, man. How you doing?
Good. Doing good, dude. I got that
Right.
short. Didn't do anything stupid today.
Well, that's a plus.
That's a plus. Yeah, man. Actually, this is 2 days this week where old Stowe would have probably eaten several hats worth of garbage and lost a ton of money. So I'm happy with the performance so far.
NinjaTrader Live is witnessing a metamorphosis of incredible proportions.
If I can slowly do less stupid things incrementally over time, someday might be able to get to the point where I'm not stupid at all. But yeah.
No.
Not reformed, Friend Tintin. Not quite reformed. I don't ever want to fully reform.
I've been trying a lot longer than you to get to the point where I'm not stupid at all.
How's it going? Is it working?
It's
Is there any hope in sight?
no. You just got to accept it and be happy.
That sounds good.
Oh man. So anyway, no, good job this morning. What are you back? You're not back this afternoon, are you?
Yes, sir.
You
Yes,
are.
sir. Thursday, me and the big cat.
You and Big Cat together.
Yep, that's right.
I like it. I like it. Yeah, hopefully Leo's 100% healthy.
I think he's good. He's back.
Yeah.
He's good.
Yeah.
I think he was better this week too. He was just taking care of his baby on Monday, so that was the sub.
Yeah, got it.
But yeah,
One thing
good.
I meant to ask you is, so I know you come back on a lot in the afternoons, and at what point though, whether you're on or not in the afternoon, at what point do you go back to the screen and say, all right, lunch is over, I'm going to start looking for trades?
Well, it depends on what I have to do. I try to it sucks that our summertime schedule is weird, so I have to wait and run in the afternoon a lot of days.
Yeah.
So I normally I'll get out of this, make something to eat, go get my miles in, shower, and then by then it's usually time to pull the screen back up.
Yeah.
If I don't have if I have a trade working though, I'll often just chill and try to manage it and keep my eyes on it so that I don't miss any action in the in between. It depends on if we're in a balanced day or in a trending environment too. So
Totally makes sense. And what are we talking about miles? How many miles?
well, I'm trying to do 5 a day, walk and run combo just to get the 10,000 steps. But I at least run 3 of them.
Okay.
And then I take Saturday off, but then I mow my lawn, which is 15,000 steps. So that's a different thing.
Steps are steps, brother. I love it.
Yes, steps pushing a oldie timey lawnmower. Those count too.
Oh man. Anyway, thanks for this morning. Appreciate you as usual.
Thank you, buddy.
Don't forget, everybody, follow Stowe. Let's get some thumbs up. hit that thumbs up button, hit that subscribe button for this young man. We appreciate everything he does, and looking forward to seeing you this afternoon, buddy.
Yep, I'll see you this afternoon. Chat. Sorry, I was paying attention and explaining stuff. If you guys ask questions, just come back and ask me and Leo later. I'll be around. So, thanks, dudes.
All right, man. Thanks. We're going to go ahead and just do a real quick edge report here. I want to talk about copper. I mean, this has been an incredible experience it's a very rare experience when we see something like this. Anthony mentioned it this morning when we were together at 8 o'clock, and this is a daily chart. I mean, and it's a crazy daily chart, right? So, but if you think about it, it's not, because this is like what was Liberation Day around here, right? So, right now copper prices up until then, copper prices were breaking, right? And then they formed a base, they formed a bottom, at least for a few sessions. Then Liberation Day kicked in, we rallied, right? Tariffs are scary, right? Sideways, 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 right? The market assimilated the price for a long period of time. This is a long consolidation range. It started from the 24th of April and went really all the way until June 25th. And then we had the boom, the 50% bazooka tariff right here in this big green candle. And then we started consolidating again, right? And then it's like, oh, this might be here to stay. And then all of a sudden a change of pace, and we had this huge breakdown. Now, yesterday we wicked to the first area of support, which was part of that long-term consolidation period, and that was at 4.59. Now, the next area down was before any of this tariff nonsense started, and that's the next area of support down here. That's a 4.10, and you could see today's a decent red candle here, right? We're moving in that direction, right? So kind of remember that 4.10. Anything could change, of course, in the narrative, but this was price happiness before, and this is where we're at right now. So we're pretty close. Intraday, we have, we're south of VWAP up here, but look at this consolidation. Ever since the London initial balance started, sideways, right? We've been sideways. We're tracking 4.4155 on the bottom to 4.3285. And so we assimilated all this information. The market is efficient. We got to this price right now, and this point of control is pretty solid for today, right? Short of any additional news, we might not get any more information. Now, the reason why I'm spending so much time on copper is I want to point out that this micro copper contract is pretty good, right? And you put an M in front of the symbol, right? MHG. And, right now we did about 39,000 contracts. It's a tradable market, right? It's a tradable market. And here's today. And I just threw a sim trade on just so you could see kind of the tick value. Each tick here is worth $1.25 instead of $12.50. And of course, if you have two contracts on, it would be double that. It would be $2.50, and so on and so forth if you scaled in or out. So the nice thing about this is the margin is a lot smaller, right? And it's a very tradable market with some big moves, right? So I'm a super fan of this market right now. I think some of the micros in the commodity markets are a little bit underestimated, I'll say. But, the chart looks the same. The levels are the same. We have previous sessions low here. We're below that right now. We're still within pretty much the London initial balance going sideways, and the initial balance here in the States. And it's an awesome market to look at here. So in any event, I just wanted to kind of throw this out there. The micros there's more than just micros in just the stock index futures. And this is tradable. It's a super tradable market. We're looking at a double distribution, possibly. Point of control right now is pretty firmly established, but it could be a breakup to the upside or the downside. There's another competing point of control up here at 4.4405. So I guess my message is don't let that huge move in copper yesterday freak you out. You could do that. You need to have your stop losses in, no matter what. No matter what you're trading, make sure you have your stop losses in. But in this particular case, you have 1/10 of the exposure, and it might be a good way to get started in trading some of the commodity markets. So I just wanted to go over that. Appreciate everybody being here in the chat today. It's Thursday. We got a lot of work to do still for the rest of the day. This afternoon, I'll be back with Shai for hot commodities at 2:30. And then the big cat, Leo, along with Stowe, are going to be back to close trade the close as they usually do. Those guys are awesome. I can't wait. In the meantime, thank you everybody for being here. Thumbs up, subscriptions. Really appreciate you guys. So relax at lunchtime. Hopefully we'll see you back here at 2:30. Thanks.